Hi, and welcome back to our Day 2 afternoon session of WWTD. What would Tiger do 2022? Investing Tomorrow today is the theme of our webinar brought to you by Tiger Brokers. Before I go on, I just want to congratulate all of you that have been tuning in for the past 2 days, including this morning as well. We want to give you some prizes. So the first 5 of you that just do a thumbs up in the comment section, you walk away with 88 Tiger coins. Okay, very easy as that. First 5 of you that do a thumbs up in the comment section, you win 88 Tiger coins. As simple as that. Now, very quickly, today in the morning we covered about the fundamentals of investing, and this afternoon session today we'll be talking about the advanced strategies. Okay, and before we do so, we're going to dive in with one of our very own Tiger Brokers team to share more about the app and Tiger Brokers a whole. But before that, let's shift our attention to the experience store over at Tiong Bahru. There we go. It's at Yong Siak Street. Once again, the last day is today. Okay, it's been running for 2 days, yesterday and today. Last day today at 8 p.m. Okay, remember, last entry is 7:30 p.m. All right? Okay, and here's the thing you want to watch out for and catch right there. Literally, at the claw machine, you can catch your prizes, okay? These are the prizes to be given away there. Commission-free voucher, $50 to $100 stock voucher. We've got 888 Tiger coins to give away. That's right. Chinese New Year is around the corner, but here in the year of the Tiger, we are just going to give you right here, right now, okay? And we've got Tiger Brokers Merchandise Limited Edition, and last but not least, the Apple AirTag. Once again, last entry to this experience store is at 7:30 p.m., guys, okay? All right, we got participating outlets. They are Chapter 55, Tian's Old Seafood Charcoal Porridge, as well as Drips Bakery Cafe. Now, bear in mind, when you go there, you got free stuff as well. Free gelato, okay, free coffee, 10% off the menu, and a free hot drink. All right, these are just some of the participating outlets. There are more there, okay? We got a drink sponsor as well, Purple Tea from Asia Farm. Special shout out to them. Thanks for sponsoring and hydrating us through the past 2 days. Now, when you go about cafe hopping, for those audience that are not in Singapore, next time when you come here, okay, Tiong Bahru is the area in Singapore for cafe hopping and just taking in the local culture in that sense. All right, when you go about that, remember to look out for the Tiger dolls, because when you take a photo with them, I heard you can get an extra chance at the claw machine to win all those awesome prizes. We got transport covered for all of you here. Very easy. Okay, it's 30-minute interval at Tiong Bahru Plaza. Okay, remember the last shuttle is at 7 p.m. Okay, here are the details. I'll leave it up for about 3 seconds for you to take a screenshot if needed. Okay, and after you take the screenshot, continue tuning in. And if you have time after we end at about 5, head on down. Okay, all right. This is what it is. And today is the last day. For those of you listening in on YouTube, you want to download the Tiger Brokers app if you have not already done so. Because why? When you do that, this is your last chance to win awesome vouchers right at our landing page. There is a surprise egg to click on. Okay, you know what, guys? As always, enough of me talking about the experience store. I'm going to let you watch a video of how it actually looks like. Stay tuned. That's right. Welcome back. In the hot seat, we've got Rafael Goh, Senior Executive Business Development Team here at Tiger Brokers. Hello.
Yeah.
Thanks for taking time to join us. It's a joy to have you here. And today we're going to be talking about optimizing your investing experience, Rafael.
Yes.
Okay, are you ready?
Yes.
Okay,
ready.
to share with us, the audience, what is it like navigating the Tiger Brokers app and tell us more a little bit about Tiger Brokers.
All right, certainly.
Yeah?
All right.
All right.
Allow me to go
Let's
through.
dive in. Okay, sure. Wow, right in.
Yeah. All right. Okay, Mark. So like I shared with you, so basically the Tiger Broker app, first off, it's a very informative, it's innovative, and last but not least, it's also intuitive.
Okay.
Okay, so the Tiger Brokers app allows you to gain access to global markets onto instruments such as equities, mutual funds, futures, options, and also at the same time IPO applications in the US markets, Hong Kong markets, and our local SGX IOPs as well.
That's quite a lot of things, huh?
Yeah. All right. So before I dive in, I just want to share with you is that on our platform, it's more than just a single product kind of platform. I understand that most other trading platforms, be it CFDs and all, usually they are only pertaining to single exposure. But what we have here is a suite of products, meaning to say that there's a vast instruments for investors that are from the beginning stage towards all the way towards the intermediate or the expert levels.
Okay.
So it covers all across the board.
Just a quick question, maybe for some of us, especially the audience that are new to this investing journey, having a full suite of services, does that make it very complicated?
All right, so thank you for the kids question. I don't think it's complicated. Okay, first off, why do I say that? Our app, first off, I would say that it's very comprehensive. And on top of that, it has instruments to allow users from across the board, be it that you are a beginner, that you do not know where to start. All right, there's always funds out there for you to choose based on thematic, regional, or this kind of things, or rather factors that you're looking at to get started in investing. Next up would be for, I would say, intermediate traders or investors. They have what they want in mind, and they probably know what they are doing. So with all these instruments and all, they will be able to gain, I would say, access to global markets easily, not just through equities. They also can hedge their positions using the form of options.
Okay.
And last but not least, we do have futures as well for those that want to trade in the futures market. Okay,
just now you mentioned 5 different aspects that you can utilize in the Tiger Brokers app, am I right? Why don't you show us how does it actually look and how does it actually work?
All right, allow me to show it.
Sure. And share with the audience.
Okay, all right, so like I shared with you, so basically our one-stop platform offers equities, mutual funds, options, and as well as futures. Next up, like for instance, I shared with you, those beginner kind of investors, where can they get all this information from? It would be from our community section.
The community section. Is this something that is unique specifically to your Tiger app?
Okay, so basically community section, I do not think is unique to us, but nonetheless, it's for our Tiger user community. And our users are able to share their experience across this platform. Think of it like a Reddit. Like Wall Street Bets, they have a forum.
Yes.
So likewise, on our Tiger app, we do have such a platform
Can I just ask you, when you talk about community, how large is the Tiger community?
Okay, the Tiger community, roughly gauge is around, for the Singapore users, we are looking at 200 over 1,000.
Wow, that's users. That's a lot.
Yeah.
And I can see from the whole 2 days of webinar, actually the engagement is really high on the app. Okay. How about overseas? Just a rough gauge as well.
Overseas market, if we are talking about our Chinese clients, definitely there are more. But in terms of our local Singapore users wise, we are looking at our community section will be close to 300, 400,000 users.
Okay.
Incorporating our foreign users, it will go into the millions in our Chinese market, together with our Chinese counterparts.
So that is indeed a very large community and a supportive community in a sense where if you take part in this, you are not just investing for your own needs, but you have a community that supports you in a sense.
Correct. So basically, allow me to share more.
Sure.
The community section wise, it allows users to gain tractions, or I would say find trading ideas, or rather some of them would have their own I would say, their own thinking and their own research. And this community section allows them to post such research and discussion, which I feel that compared to the past traditional investments, we do not get this kind of interaction as much as these days. But these days, we are looking at a broader sharing of information. And from there on, I think that in this new era, new investors are able to gain more knowledge from each other, comparing, cross-referencing their information and all.
Okay, thanks for that. That was really insightful in a sense whereby, you know, especially maybe for some of the audience who are considering starting their investment journey, it might be a little bit daunting, you know, but then having a place where there's really a comprehensive sharing that's done also from the community, a ground-up kind of thing, I think that's very organic. Huh?
Yes,
very organic.
Certainly, because I would say that not just people are posting about their gains, some people also do post their losses, and sometimes I think, correct, they share their lessons learned, and in the stock market, it's not always a one-way straight up. And definitely in the financial markets, there are dips and all. So it is through all these sharings that people find opportunities in the market. And if a company is fundamentally sound, then it will be for users to determine their research and comparison across to share their ideas. And nonetheless, these are not financial advisors. It's just a comparison of their information.
Yes, that's right. Thank you for that, Raphael. In a sense, yes, whatever that he's sharing is really for us to have a better sense of how to navigate the app. Now, speaking about market and as well as the usage of the app, especially users, what is in it for the users, especially with regards to instruments that they can use on the Tiger app, on the Tiger platform rather?
Correct. So like I shared earlier on, allow me to share the slide.
Sure.
Okay, so on our app, we do have a range of instruments ranging from equities to mutual funds, options, and futures. Alright, equities alone, it allows people to gain, I would say, to participate in the company that they would like or they like, then they buy into those companies. And with the assistance of options, it also allows them to hedge or to find time for them to buy into certain companies as well. Next up would be for investors that basically have what they want to invest in mind but do not know specific counters. Then it comes into play with our fund more, whereby users can actually participate in thematic strategies through market segmentations and also through regional segmentations as well.
And the fund more, just don't mind if you go back to the previous one. The fund more is under which area can we find the fund more? It's under Discover, right?
Yes, correct. It's under Discover.
So that's the middle tab at the bottom.
Correct.
Okay.
So allow me to share, like I shared with you, the community section. Then next up would be on the informative page.
Sure.
Informative side, we do have live webinars as well. And all these live webinars streaming, time to time, we will engage in our vendors and our partners, such as I would say all the fund houses, Fidelity, you have Franklin Templeton, all this. So all these market updates usually will be available on the live section. So this live section wise, it allows users to like video. You can look into at any point of time, correct, video streaming at any point of time, be it you're in your transport, going back home, the webinar happens, you are able to play it.
Or like a podcast as well.
Correct.
You can choose whenever you want to play it. And just play and listen.
Yes, you're right. Absolutely right. So next up would be that all these podcasts, do take note, some of it are recorded. When these sessions are recorded, fear not those who have missed all these live webinars and all, you will be still able to participate through the playback. Okay,
that's right. For those of you that may have missed yesterday's one as well this morning, what Raphael is essentially saying is that you can rewind this and then after that you can go back to find the morning sessions. It will be there in the app. Where do they find the videos again?
All right, so it's under our, allow me to go read.
Sure.
So it's under our live section. Yep.
The live section, which is the second tab.
Correct. So it's under live. Then you will be able to see a stream of current, the top part will show the current live webinars, and the bottom section would be able to show you all the playbacks available.
Okay, interesting. Raphael, just looking at this slide here, in this screenshot, I noticed that there are other tabs as well on the top. News and what are the others?
Videos and all. So basically the news and all.
Tell us about the news.
Correct. So basically the news portion would be some of the highlights on global markets. We do have Reuters TV, So Reuters TV allows users to gain more, I would say, information across the board, across financial markets, to be updated. But however, some of these are only available on subscription basis.
Oh, okay. Care to share how much?
So it ranges for 29 USD per annum.
Okay. And this is for the news portion, especially if they want a little bit more updates and to keep up to date, up to speed with what's happening in and around the market.
Correct. So time to time, we will have promotions, and this subscription can be free for users as well. So just keep a lookout at your reward center.
Okay, then on behalf of the users, I got to ask, when is the next promotion coming up?
This I cannot share, but time to time we will have promotions. Just keep updated. Just look into your app under Me, Promotions and Rewards. You'll be able to see all this upcoming.
Okay, under Me tab. Okay, so that's the bottom right corner. Okay, fantastic. Now, can you just share with me then, how can investors benefit from using the Tiger Brokers app?
All right, okay, so allow me to share the intuitive part. Okay, so for investors wise, we categorize them as you have your fundamental guys and your technical guys. Fundamental guys, usually they will prefer a multitude of financial statements, and they will look at the fundamentals of a company. So usually it range from the financial statements, their cash flow and all. So basically on our app, there's infographic shown, like as such in the slides. We do have simplified infographic to allow beginner users to learn about the analysis of the company.
Then a quick question right here, Raphael, is to ask, you've got the new users and those that are new to this investment journey covered, but what about the more intermediate and maybe expert investors out there?
All right, so allow me to share the next slide.
Sure.
All right, so basically for investors that knows their stuff, they will want to deep dive into financial statements, financial ratios before making their own decision.
I hear you.
So as such, if you were to look from our app, we do have all this all in one. So it's at a touch of fingertips. You have all this information readily available, all the way from financial statements, ratios, the segment, the region the business is participating in, and as well as economic calendar, so you don't miss out on certain corporate events such as dividends and all. All right, next up, like share with you, intermediate, some of them would want to see some price movements.
Yes.
So price movements wise, I'll relate this to technical investors. All right, so technical investors wise, we do have, this on our mobile is a simplified version. So it's a simplified movement, interpretation of the stock movement pertaining to price action. And for more complex indicators such as your Bollinger Bands, your MACD, and all, it will be available on the desktop app. Okay.
So in a sense, you are saying maybe for the desktop app, it's catered more towards the intermediate to expert level.
Correct.
And so, for the beginners, or those that new on the journey, they can just very easily just at the touch of a finger and then just start out from the app.
Yeah, for our mobile app, it's more user-friendly. I would say it is on the fly. We want to keep things simple. We want to allow information to be able to, all these users to be able to grasp it as quickly as possible so that they don't miss an opportunity.
As easily as possible on the go whenever they want. Whether they are driving in the public transport, wherever you are, whichever time zone you are at, they can just tune in and listen to all these news. Okay. Raphael, can I just ask you, how was it like for you when you first started using or started investing in your journey in investment? And
all right, so I would just be cordial with you, sharing with you.
Sure.
Yeah, so as you know, I don't want to name names, but back then there weren't many of these online brokers out there.
Okay.
So I would say some of these applications back then were old school, and that it gets the work done. Just that we do not have such simplified details. Most of these details will require you to be able to know that what you are looking for, and you specifically look for it. Whereas on our app, it's very informative. I would understand that some users, new users, may find it a bit complex and all, but nonetheless, don't worry. All this, I would say, it has been compact to bite-sized individually information for you to process quickly and as easily as possible. If you were to refer back to my slides, allow me to share. Okay, likewise, I show you the infographic. It's easy for people to grasp it.
Yes.
You can see, okay, what's the growth potential? What is his cash flow capabilities and all? And I do not need to go into details. But if need be, if let's say I require details, then no worries. On the app itself, we do have the details as well. All these statements and earnings statements are all readily available.
I understand there are annual reports as well.
Correct.
That can be viewed. Okay. Very interesting. So for yourself, if I were to ask you a personal question whereby your current self now as an investor, if you have to turn back time and to advise your younger self, okay, what will be the top 3 things you will tell your younger self?
I will tell myself to be more, I would say, daring.
Daring in what sense?
Daring
Everything just buy at the bottom. Okay, it looks like it's going out. Okay, let's buy.
You can put it daring. Yeah, you have to be gutsy because fortune always favors the bold. So yes, it's not that everything you buy. Even if you do not know where to start, there's always a place for you to start. And which is why this app, I feel that it's quite intuitive and informative. People from all across the board, be it you're beginner or whichever, there's always something for you.
We hear you.
Yeah, so
that's the first.
Yeah, correct. That's the first thing. Secondly would be that in the past, all this information weren't readily available in a sense whereby you won't be able to see community sharing their positions, sharing their trading ideas and all. But with a more, I would say, open and information and in terms of the internet, how much has it grown? Evolved in terms of the sharing of content. I believe that this portion will allow people to be able to share their ideas across, and with more information, people will be able to make the right decisions. In the past, you don't get such things.
Can I just ask then on the idea of ground up sharing from the community? How about, in a sense, for lack of better terms, top-down sharing? How often are we going to see this kind of webinars or even professional expert speakers from the industry speaking or being shared on your video platform or your live platform?
Actually, we do have constantly a live session going on every Monday.
Oh, every Monday?
So just to keep up with that, we do have with Kon Hao, one of our speakers. But time to time, we will rotate our speakers as well. So we will be having future-wise going on. We will have speakers from SocGen. We will have speakers from relative fund houses, such as,
that sounds very exciting, Raphael. Just a quick question. You mentioned Monday, right, Raphael? But what time of Monday is it? Like the whole duration of Monday, so that some of our viewers can understand maybe if they are looking to continue on this journey to grow and evolve and learn, they want to set aside the time, devote.
It will happen on every Monday around 7:30 p.m.
And for how long?
Up to 8 o'clock.
Up to 8 o'clock. Okay, so guys, you've heard that from the man himself, a representative from Tiger Brokers, sharing with you every Monday, 7:30 to about 8.
Yes.
Okay, so just 30 minutes. It's not much commitment for all of you. It's Monday. I think that maybe it's the best thing that will light up your life on a Monday. Chase the Monday blues away with Tiger Brokers on the Tiger app live video, okay? Right. With all their esteemed speakers, expert speakers. Raphael, very quickly now, we're going to go online because we've got a question from the audience, okay? One of you asked, Raphael, when can we trade index options on the Tiger desktop?
Okay, so for the Tiger desktop wise, it is actually a work in progress. I would presume that it will be more for traders that wants to do their charting and all. But for certain features such as complex options and certain IOPs, up till now we are still rendering. We are working closely with the desktop app team to get things up to date, up to speed.
Okay. So you heard from Raphael that akan datang. Okay, so just be patient. It will come very shortly. By when?
Usually they always tell me first quarter.
First quarter. Usually. by first quarter. So be patient, just like anything you do, okay? Let them finish the work and then you can definitely access and trade index options on Tiger Desktop.
Yeah, but no worries, Tiger app is always constantly on the upgrade.
Okay.
So we want to keep up with the market and come up with innovative strategies as well.
Okay.
So all this, should be assured that all this will be factored in, and we do hear our our users and all. All these feedbacks that you've given us, we thank you for that, and we are working closely to innovate our platform to allow you to have a better experience going forward.
Okay, that's right. You heard a commitment by Tiger Brokers, always taking your feedback seriously for the innovation and to improve the user experience for all of us here. So we want to thank Raphael for his time. But before I let you go, Raphael, any last words for the audience?
All right. So,
okay, wait. Before that, what are the top 3 unique things about the Tiger Broker app?
All right. So for the Tiger Broker app wise, I would say that the unique features compared to the rest is that we do have what we call a Tiger Lab. So
Tiger, I beg your pardon?
Tiger Lab.
Tiger Lab.
So allow me
the lab
share.
of the tiger?
Correct.
Wow.
Okay, so under opportunity wise, if you were to scroll down, there will be a Tiger Lab whereby this Tiger Lab.
Just hold on a while, Raphael. Just for our audience online, where's this opportunity portion?
Oh, it's on the discover part, just click on opportunity.
Okay. Just towards the end of it. Huh?
Correct. So the opportunity parts, you can scroll down. So basically, opportunity parts allow investors to find out as it speaks, seek opportunity in the market.
Okay.
So we do have technical screener and also the Tiger Lab, whereby it's specifically crafted out by our quant research team to find opportunities in the market.
Okay. Wow, sounds very interesting.
Yeah.
Indeed, very unique. Tiger Lab. Okay, once again, it's at the Discover page under the Opportunities section. Just scroll all the way to your far right.
Yep.
Okay, that's the first one. What's the second one?
Second one would be, I would say that most people that trades, after a while you get bored. You don't know what to buy.
But too much money, you already don't know what to do, is it?
Right. So after a while, you don't know what to buy, but yet you want to participate in the market. Well, I think, why not? We leave it to the professionals.
Okay.
So professional-wise, hassle-free investors, you'll be able to participate in financial markets, but without the hassle of doing individual stock pick. Allow your preferred asset managing companies to do it for you. So we do have the big names, BlackRock, Franklin Templeton, Fidelity, UOB Asset Management. These are some of our partners that we do have funds in.
Okay.
So if, let's say, one day you get bored of, you want to stop chasing the market, you don't know what to buy, just go into it, look for the sector that you actually believe in, and go for your preferred asset managing company, and they will do the job for you.
Okay, so hassle-free is the second unique thing about the app, and Tiger Broker as a whole.
All right.
Okay, and third one?
Third one, I would say that probably on our app, we are the few that allows you to do options on your underlying holdings as well.
Oh.
So you can effectively hedge your equities portfolio with options.
Okay. So once again, a recap of the top 3 things very quickly, Raphael. First one?
Okay, first one would be
the unique aspect.
Yeah, correct. Unique aspect. We do have market screeners, technical,
That's right.
all these Tiger Lab quant funds to allow users to spot opportunities.
The second one is hassle-free.
Hassle-free. And last but not least, as much as we like to gain exposure, we would like to protect our asset as well.
Yes.
We allow you to use options to hedge your equities positions.
Okay. All right. Thank you so much for sharing with us, Raphael. We really appreciate you being here on behalf of the Tiger team. Last question. Any other promotions or deals happening at the Tiger Broker office or anything you want to share with our audience?
All right. So all these promotions can be found under your app. So it's at under the Me tab on the bottom right-hand corner, under Rewards and Promotions.
Okay.
Just time to time, do take your time to tap inside, or maybe right now you might want to just tap inside your app to see if there are any other things that you're missing out on, because sometimes you may be receiving coupons and all which you do not actually know.
Okay.
And next up would be for more further promotions, it's always constantly updated on our homepage at www.tigerbrokers.com.sg.
Okay, so we are running out of time. Just one last question. I promise this is the last one. For those of the viewers that are, in a sense, new, just download the Tiger app, but they have not started their investment journey, is there any incentive or any perks for them if they were to start doing in any, I heard there's some Apple share or anything?
Correct. Yeah. So as long as you make your first $2,000 deposit to your Tiger trade app, so you'll be instantly being given out Apple share. You'll receive automatically an Apple share. And on top of that, for people that do not know what they want to buy, currently we do have promotions on our UT site as well. Just do keep a lookout.
The UT starter pack.
Correct.
Right? The one that gives you 50% off. Sorry, not 50%, I beg your pardon. $50 off. Right? That helps you start with equity and bonds as well.
Correct. So the funds-wise, it allows people to gain multiple participation. It will not be a single asset class alone. It can be hybrid and all. So I think we have our platform serves a one size for all. It's really a one size for all. Be it you are new to all the way to expert, we have what you require.
It's the Tiger app is catered, and as well as the desktop app. All right, the Tiger Brokers platform is catered to everyone.
Correct.
Right.
Correct.
Okay. All right. That brings us to the end of this segment. Rafael, on behalf of the audience as well as the rest of the Tiger Brokers team, thank you so much for taking time to join us and sharing with us those insights and very valuable tips also of how to navigate and how to better use the Tiger app. So thank you once again. Thanks. Okay, pleasure. Now, very, very quickly, next up, we've got Pauline Teo, Executive Director from V College, that will be speaking to us about how to invest smarter, faster, and easier. So stay tuned, guys.
Hello everyone, welcome to this WWTD 2022 and to learn how to invest smarter, faster, easier. Yes, that's the topic that I am going to introduce to everyone. But first of all, a Happy New Year to everybody. This is 2022. How great it is, right? And I always like this quote by my favorite investor. His name is called Warren Buffett. And he said this, risk comes from not knowing what you are doing. Which means if we want to have good investment results, key thing is about knowledge. So the thing that I always ask myself is, how can I know how to do investing smarter, faster, easier? Why? Because a little introduction about myself and you would know where I'm coming from. Because most of us in doing investing, knowing that it is important, knowing that money is important, we don't come from the financial background. I personally don't come from the financial background. I was 10 over years as a civil servant. Yeah, so I'm going to introduce to you a little bit about myself, and then after that, I will show you some case studies. And today, I'm going to show you a particular case study later on. Just stay tuned. Something that I invested just recently. Now, whatever stocks that I mentioned today do not constitute any form of a recommendation to buy, to hold, or to sell. If I buy the shares, I will share with you the analysis, which later on you will be able to listen to my analysis why I actually do that. And this particular company is probably a service that many of you would be using, since the circuit breaker and even in the future. Now, a little introduction about myself. Currently, I'm the executive director of V College. Some of you would have seen me in like YouTube or Facebook and say, yeah, you always appear in my social media. But many people didn't know that before I started off in the financial sector, actually, I was a civil servant who didn't know anything about investing. And I learned from V College how to do it from scratch, from ground zero. So today, I am coming from a space of an investor because I know many of you are in the same space like me 11, 12 years ago, someone who did not know how to do investing. But why did I actually do that, learn how to do it, and especially in stocks market, which a lot of people thought it might be risky, is because I know stocks investing is not just about buying a piece of paper or a share price and see whether the share price goes up or down. If we invest into a stock, it is actually a business. And a business can make money. It generates revenue. So later on, I'm going to share with you the method that I use for me to invest safely and most importantly, sleep soundly at night. I think having the right methodology is really important when it comes to investing, especially during this period where people are saying there's a lot of uncertainty and the market is so volatile, right? So you can see over here right now, after I practice this method on value investing, currently I am collecting a 6 digits in terms of passive income on a yearly basis. Yeah, it is normally on a yearly basis that I calculate. So from someone who didn't know how to invest, at the point of time, I actually, 11 years ago, why I attended V College class was because I lost, sad to say, $40,000 into something which I didn't know. All right, because I was ignorant to investing. That's why Warren Buffett said this very well. Risk comes from not knowing what you are doing. So that's why have the knowledge. Start to learn. L-E-A-R-N. And if you remove the L, you will realize E-A-R-N, earn. Isn't it great, right? So today, my portfolio, you can see, is near to about $4 over million. I did not start off to invest at $4 over million, no. I started with only $50,000 11 years ago after losing 40 over K. Actually, I invested in unit trust. But the thing is this, yes, even though I say I invested in unit trust, I lost money, doesn't mean unit trust is bad. I just have to make sure that I say it's because of my ignorance. I didn't know what I was actually buying. So let me share with you the method that I actually use, because V College, we have 60 over 1,000 graduates. And as you can see, many of the speakers probably today that you see are our students as well. All right, later on, there will be someone coming on board. He also attended the class in V College. And V College has been around for 13 years. But what is the method that we actually use? I'm going to give a recap so that later on when I discuss this stock analysis, you know where I'm coming from. So when we talk about this thing called value investing, the thing you ask about is, what is value investing? Now, to put it simply, value investing just means buy something worth $1 for 50 cents. Let me repeat. Buy something worth $1 for 50 cents. And you say that, it's so simple, huh? Basically, it's a very, very simple but profound, yes, wisdom inside it. There's a difference between value and price, which a lot of people didn't understand. What do we mean by it? I know many of you probably who have bought, like, let's say, property or a house before. And we know in order to take a bank loan, we need to get a valuation. So let's say the valuation from the bank is worth $1 million. Would you pay $1.5 million for it? The answer is no, right? But let's say if somebody, need money urgently, the seller said the bank valuation is $1 million, and then because I need money urgently, I'm going to sell it at about $800,000. Now, assuming the house is not haunted and you have the ability to take a bank loan for the $800K, all right, what would you say? That is an absolute yes, right? It is worth it because something worth $1 million right now selling to you at $800,000. Basically, we profit $200K upfront. So this is what value investing is in a nutshell. But it is easier said than doing it. Because yes, Pauline, I know the difference between value and price. But now there are so many stocks out there. How do I know the difference between value and price? this is where when we invest into a stock, we need to look at it as a business. Now, business has got valuation. How do we invest in the stocks? Just now I mentioned, when we invest in a stock, it's not about just looking at the share price or we are seeing whether it goes up and down, buying a piece of paper. No, we are investing into a business. And I'm going to share with you this concept called the 3R concept. You may want to write it down, oh? 3R concept, what does that mean? Right business model, right management at the right valuation versus price. Now, what do I mean by right business model, right valuation, right management? So, when we actually want to invest in a business, the business must have a good business model. Now, how do we know that the business has a good business model? The first rule of thumb, invest within your circle of competence. Let me repeat, circle of competence, which means invest in the business that you know. Now, how many of you have heard of this stock called BreadTalk? Yes, it has been privatized. But you know what? I've made more than 300% from this particular stock called BreadTalk, which I think Singaporeans, Malaysians, we all know BreadTalk, right? In 2011, why did I invest in it? First of all, it's within my circle of competence. And my boy really loved this xiao long bao from Ting Tai Fung, which is owned by them. And at a point of time, I always see their bread shop is always queuing and people are buying their bread. And it's not the one that's fighting on prices. No, they don't charge the cheapest price for their bread. Yet, people are buying and queuing every time. Not only that, I see people going to Food Republic and some of their other restaurants. At the point of time, I take a look at their financial results. Their business in terms of their revenue, profit, cash flow has been growing. Not only that, they also have been expanding into other areas such as Malaysia, Thailand, and China, and their stores has grown from 700 over stores to 2,000 over stores. So you can see over here, is the business growing? The answer is an absolute what? Yes, right? So with the business model growing, and we know at a particular time, we know this business, we take a look in terms of the management, whether the management has done a good job. Now, with their revenue, profit, cash flow keeps growing. Do you think over the years, the management has done a good job? The answer is a definite yes. But it does not mean that we can go into invest into that particular stock, because we also need to take a look at the third R, which is the valuation versus the price. And valuation can be calculated. That's a piece of good news for every one of us, right? You do not need to be a math expert in order to calculate the valuation. All of you who know, some of you who may be in the financial sector will say, yes, Pauline, I know. In fact, those who learn accounts would also know how to calculate the valuation. But that also doesn't mean that you know how to invest, you know. So many of us know how to calculate probably the valuation, but why is it so many people are not investing? Later on, I will share with you. So let's take a look. For example, let's say you know how to calculate the valuation, you know how to buy it undervalued. This is where we want to find out, Pauline, there are so many stocks out there in terms of, getting to know how to invest in terms of the 3R concept. Let's say it has a good business model, good management, and then in terms of valuation versus price, it is worth $1. Now I can buy it at 50 cents. 3R actually means, how do I find such stocks, even if I have the framework? This is where I'm going to show you a video how to find undervalued stocks, because we do have an app called the V app, which you can download from web.vi.app. And this particular app is certified by the Singapore FinTech Association, licensed by the Monetary Authority of Singapore. So guys, take a look at this 10 minutes video, because later on, I am going to ask you some questions which you will stand to gain how to get 88 Tiger coins. So let's play the video right now. Pay attention.
Hi guys, we are back into the V app. Yeah, because we talk about, let's say when we have stocks that's overvalued, we can do what we call a capital recycling, sell off, get back our capital. But when we get back our capital, it doesn't make sense for us to put that money back into the bank with low interest rate, right? We want to make sure the money will work hard for us. So we need to find other opportunities out there. So where do we find? Just like I showed you before that about the screener, right? Yes, This is one way where you can find out in terms of screen out which are the ones that are undervalued. And from there, you can find the opportunities. But of course, the other way is this. There is this super tool that is called notification. Now, a lot of times people do not know how to make use of such a tool, which we will teach if you want to learn. Okay, like for example, I screen out the stocks and I find that, let's say, DocuSign right now, or some of those stocks. For example, let's say you screen out certain stocks and you realize they are actually overvalued. For example, let's say you are happy with Meta, or you love Meta, right? This company. And then you realize that this particular company right now, well, it doesn't seem to be undervalued because the margin of safety is only at about 0.4%, but you love it when you can buy over here, right? You can see in March, right? In March 2020, over here when the valuation is like $200, you want to buy at $153, but you don't want to buy it like, let's say, when it's fair value or overvalued. You want it to be undervalued. What you can do is you can always add it into your watch list. All right, so what we would do is this. After I screen out the stocks, I will add it into the watch list, and then I will on my notification. Yes, this is where the trick is. So when it is actually undervalued, as you can see over here, certain stocks, let's say, this one is one of the stocks, like for example, Thor Industries, it used to be undervalued, now it's a fair value, or certain stocks, Align Technology, yes, I also keep track on it. Many of our graduates actually made a lot of money from Align Technology, which is the Invisalign. Okay, this is inside my watch list as well. From fair value now is actually overvalued. And yeah, something that I've actually invested for some time, Adobe. Okay, all these stocks not a recommendation to buy or sell, from overvalued to fair value. So you can see, because of the share price movement, sometimes we can't keep track ourselves, but we can put this into a notification, screen out the stocks. You can see this is the first step, put inside the watch list, and then we on the notification. When there are opportunities out there, we know where to get the opportunities. And on top of that, you might say, but Pauline, if I want to know all these stocks apart from the numbers, which is the qualitative side, how do I know the business model? I tell you, the best way is this. Write this down. Community. I'm going to repeat it. Community. Community is very, very important. But of course, we need to have the right community. That means community who knows what to analyze, where are the opportunities. And this is what we do for our community, whereby every week we give them free weekly coaching sessions in the V app. Let me repeat. Yes, free weekly coaching sessions for our subscribers and for those who are in here, okay? So we talk a lot about different stocks, and let's say when the market crash or there is a correction, what do we do? And most importantly, actually what we do is, you know, a lot of times you may be able to find the numbers over here, but what are the things that you will know? Business model. Let me repeat. Business model. So what we do is we analyze a lot about business models, okay? So I can show you the video over here, but I'm going to show you the files. Let's say, I'm just going to show you, let's say we do have a stock idea, for example, Facebook. Since many of you would know about Facebook, I'm just going to just show you an example. We actually do analysis, and what we put up is, we put up on this business model where we show you, we brief you, we highlight to you all this research has been done, and we can brief you on things that you can't find probably under the quantitative side, because quantitative in terms of the data, you know, many of you would say I can get all this from Googling, but you know what, in order to save the time, really with a good community supporting you, what we do is we actually do all this research. What we put in is we actually analyze them in terms of the business model, and we share it with our community. So my next question to you is this. How many of you think that it's really good? It saves you a lot of time when you have the right community to support you, when you have the right data tool to actually help you in your analysis. So I'm going to show you how you can come on board for this coaching session. Okay, stay tuned.
Okay, that's really great, right? Now, one of the stocks that I also make use of the V app to select is this particular stock. Just now I mentioned, okay? Yes, I did mention a particular stock. So right now, after the video, okay, I heard from Mark, who's our MC, that actually there are coins to be given out. So just now I mentioned, right, if you pay attention to the video, you would know this answer. I'm going to ask a question. And for the top, I think top 3 of you who actually first come, first serve to answer these questions, you will get 88 Tiger coins, okay? So on standby, I'm going to ask this question. Just now I mentioned, right, that, I use this particular stock, whether you call it Facebook or Meta, they just changed their name. Now, if we want to know how to invest smarter, faster, easier, there is some community, some research that's being done to help us, right? And there is an app. What is that app called? Okay, what is this app called that you could find this information, all right? It is very simple. The answer is here, okay? So it's this particular app that you can actually find the information, right? So the first 3 of you, if you actually answer the right answer, you're right to this question, you get 88 Tiger coins, okay? Now, talking about this particular app, all right? Yes, using this app a few weeks ago, our community, we actually found that, do you use this particular service, DocuSign? I mean, I use this quite a lot because V is a listed company and we have to go through auditing. So during the circuit breaker and with the lockdown, there are a lot of things that we cannot sign using paper and pen. So what do we use? We use this service called DocuSign. And DocuSign has been doing very well until during one of the earnings, their CEO actually mentioned, do not expect the growth rate to be that fast. Now, take a look over here. Do not expect the growth rate to be growing that fast. Doesn't mean it is not growing, okay? So this is where the market a little bit, agitated and then start to do some form of a reaction. So you can see that sometimes opportunities may be down there. So just now I mentioned to you there's this particular notification. We actually got the notification and know that this particular stock used to be overvalued, then it becomes undervalued. Even Kathy Woods from ARK Investing have actually put in millions of dollars to invest in such companies. So if you understand the business model, you would know what I'm talking about. But I think Mark has got a question for me, right? Yeah.
Yes, that's right. Okay. Once again, I'm back. Hi, guys.
Hello.
I love how it seems like I'm just teleporting here and there between a Star Trek Galaxy team and to where I am now here. Looks like Star Wars too. Okay, Pauline, first of all, on behalf of the Tiger team, thank you so much for taking time to be here with us today. Now, a quick question from the audience actually is this question here. Is it real-time basis? What does the app use to calculate if stock is undervalued? It's a very quick question from the audience.
Yes. So maybe let me just go over. Yes, this particular app is actually a real time, but because of today, how it's being set up, I have to record a video first.
Okay.
But at the point of time when I click on it, it is actually real time.
Okay.
Yes.
All right.
Yeah. So the app actually calculates, just now if you have seen that app, using the different models like, for example, DFE, DCF, PEGY, or PS. If you understand all this, how it's being calculated in terms of the formula, you would know what I'm talking about. But if you do not know what I'm talking about, not to worry. Later on, I will share with you how you can go to our free workshop where I'll share with you how to actually do that.
Okay, thank you so much. You heard from the lady herself. It is live, okay, real time on their app. Okay, but very quickly, for some of our audience, our viewers online, not just here in Singapore, but around the region as well, they are new users.
Yes.
So can you share with us, how do you identify what to invest in?
Okay, so that's why just now I mentioned about the 3R concept.
Okay.
That is really important because all these stocks that we always hear, I think I'm not the only one.
Yeah.
Many of the speakers actually also mentioned that stocks need to have good fundamentals.
Yes, that's
and
right.
how do we know it has good fundamentals? It's using the business model where we know that this company has got a moat, that their revenue, profit keeps growing.
Yes.
So it's a very logical thing. When a company earns a lot of money, like for example, we talk about Facebook, Meta.
Yeah.
Have they been earning a lot of money? The answer is absolutely yes. Okay.
Hey, maybe you should ask them a question and give them tiger coins.
Oh yeah, I should. All right, later on there'll be more questions.
Yeah.
We can have more tiger
Yeah,
coins. So as the revenue keep on increasing, okay, what would happen to the value of the company?
That's right.
It should go up. Yes.
And rightly so.
Correct, rightly so, it should go up. So that's why the share price will go up in tandem. It's just like, for example, Apple. Okay, now Facebook do not give out dividends yet. But Coca-Cola, McDonald's, and many of the Singapore stocks, let's say Viacom, I've invested for many years, they give really good dividends because they keep on increasing their revenue, their profits. And when they make the money, they will give us dividends.
That's right.
Yeah, and we get, this thing called passive income. That's why you can see, I've not shown you all the checks that I've collected. If you want to know, you can come for my 2-hour free workshop. Later on, you can sign up. And I will show you all those checks that I've collected over the years, that these are real money that is really passive.
So, on that note, you mentioned like good companies like Facebook, Meta, right?
Yeah.
And even Apple just now. But the thing is, what happens if you invest in a company that fundamentally checks all those boxes really good, but ding, ding, ding.
Ding, 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 and then the share price never go up, right? Okay.
Or not just never go up, but it goes the other way.
Yes.
Then what? Because I'm sure this is on the mind of some of our audience, not just the new, but even maybe those that are in the journey for a while already.
Yes.
So can you share with us, Pauline,
Sure.
how do we navigate this?
All right, so maybe we can put in the slides. I will give you certain visuals.
Okay.
It is easier for our audience to see,
Sure.
right? So you can see over here, portfolio management is really important. And I always stress to our graduates who come over here, okay, to learning our class, that we have to do portfolio management. Never put all your eggs into one basket. And I use this theory. Always stay invested, but don't invest all. Let me repeat again. Always stay invested, but don't invest all. Now, when we invest, we need to have a strategy. Okay, it will always be the case, I know. When, like for example, I bought Tesla in 2019. At the point of time when I buy, nobody wants to buy because at the point of time, Elon Musk just crashed a car. Okay, so after I bought, it dropped like 30%. Right, but now it becomes like $2,000 over and things like that. So people would say, oh, I should have bought more. See, when share price goes up, everyone will say, I should have bought more. When it actually comes down, for example, the other one that I invest called Alibaba, I know many of you have seen. I mean, the fundamentals are really great, but because of the regulations, it got beaten up. So you say, oh, I should not have bought it in the first place, things like that. So this is why we can never time the market, okay? The best way to do it is to make sure that you have certain rules in your portfolio management. And I put it in the slides. Let me just explain a little bit more, then we can have more questions. And I would encourage you to ask questions so that I can share more with you about certain application, let's say if you want to know more, okay? So you can see over here, portfolio management. First of all, ensure that the stocks meet the 3R. Fundamentals must be sound in the first place. Many of the stocks actually go down, you have to take a look. It's because the fundamentals are not sound. What do I mean? It could be a case where they are not making money. It could be a case they have been making losses for many years. It could be a case where they have no moat at all. That means, some of you may not understand what's a moat. A moat is where the competitive advantage of the company is. So they are not really making money. Why are you still investing in it? That's my question to you. Now, next thing, each stock that we invest, normally I don't exceed like a 10%. So let's say, okay, for example, we bought into certain stocks like Alibaba, and suddenly the China government has got certain regulation that prevents them from, maybe having certain things that cannot be listed and things like that, right? So that's why there's a punishment in terms of the share price. It will still be capped at a single percentage in your portfolio. But because the rest are still doing well, in fact, your total portfolio should still be making money. And then the other thing is this. I buy stocks in 3 tranches, 30, 30, 40 rule. I don't put everything into one time. Sometimes if the fundamentals are still sound, I would actually do a second tranche and a third tranche, making sure that it does not exceed the 10% of my portfolio. However, if the share price keeps dropping because the fundamentals have dropped, this is where we have to cut loss fast. When we talk about cutting loss, it is not about the stock dropping 10% you cut. No, it is about the fundamental that has dropped. That means it's supposed to be making money, but now it is not. It is supposed to have a good management, but maybe the management have changed. All right, to someone who is incapable, incompetent, it has changed. So we make sure that we have to cut loss fast. I've done that before, okay? If you want to know more later, I will show you how you can sign up for the 2-hour workshop. I will give you a QR code. It's absolutely free. I'm going to do a workshop after this specifically for Tigers, brokers, audience, all right? And the next thing is this, when stocks are overvalued, we can always do what we call a capital recycling. Take back the capital and then focus back into some other good fundamental companies that are undervalued, and we make the capital make our money work harder for us. So basically, these are the principles when it comes to portfolio management. And every time I tell people when I invest, really, today I become a multi-millionaire just now. Some of you have seen my portfolio. It is actually being done very systematically. So I follow each and every step, and I make sure that emotionally, when I invest, it is very stable. So this is where I'm going to give you a gift, okay? So do you want to have like a 1 month, at least a free V coaching as a New Year gift? Okay, if you want to do that, all right, I will show you how to get a 1 month free coaching. It's going to be on a weekly basis, okay? And what you need to do is I'm going to give you a QR code. There will be a 2-hour WWTD masterclass. I'm going to do a follow-up session on this because I know some of you realize I speak quite fast because I have to give timing. We have to give time to other speakers as well. So today, what I'm going to do is to give you an overview, maybe a taste of what is it like. So what you could do is the QR code is there, or you can go to 8vi.link/WWTD. There will be 2 workshops in January, just before Chinese New Year. It's a 2-hour workshop where I'm going to share with you specially customized design how you can get the free coaching session, because we need to prepare you how to actually do that. And I will cover like, you know, what is value investing concept. If you are still blur, I will cover a little bit more. I would also share with you how with $5 to $10 a day, you can start to invest, especially for the newbies. I think this would be very, very good. How can you actually start? And also to showcase you the live application of the app. Some of you have asked me just now in the Q&A, is this live? Yes, it's absolutely live. I'm just going to show you how it's being done. It's going to be in the evening. Okay, if you want to use it maybe after 10:30 where the US market open, you will see that it's actually live. Yeah? Yeah. So feel free to sign up right now because you have another 30 seconds to do so, because later on, Mark is going to, and me would have a Q&A session. Yeah, and we're going to answer more of the questions. And of course, before I do that, I got 2 more, I heard. 88 Tiger coins to give out. So while you are signing up, I'm going to ask this question.
About Facebook, is it?
About Facebook.
On Meta.
On Meta.
Are they profitable? You gave the answer just now.
Yeah, I gave the answer just now.
Okay, but no, don't let me interrupt you. How about you just share what is the question you want to ask the audience?
Yes. When we want to invest, we have a framework. What is that framework called? How many are? Yeah, how many are? Because we cannot just invest like that. It cannot be a case where your friend tell you this stock is good, you anyhow go and buy. There is this how many are, okay? This magic number. So just type this magic number, include that R, and 2 of you, because I've got 5 to give away, just now I gave out 3. So now the other 2 of the 88 Tiger coins, just type in, and the first 2, you will be notified in getting your Tiger coins. How many are? What concept do we use? And if you want to, even if you don't get the coins, it's okay. We are going to have this 2-hour free class, which you can sign up right now. And I'm going to show you the V app. I'm going to show you how we can start to invest. And you can start from there and make your 2022 a really good start in your financial freedom.
All right. Thank you so much, Pauline, for all of that. Hi, it's me again. Now, one thing that caught my attention just now when you were mentioning about the rules of portfolio management, and you shared about how to cut loss fast.
Yes.
Can you give the audience a quick teaser of one of your examples, your personal examples? To give a teaser, because like you say, this is just like a preview of the master class, right? So a teaser, give us...
how to say a bit and not to say a bit.
Can. I will cut you when you say too much.
Okay.
Or when the timer comes down, we've only got about 10 minutes left.
Yeah. Actually, it's very fast.
Share two
Can
examples.
I share this particular one, which I actually cut loss quite fast?
Help
it's
me
not a recommendation to buy or sell, because you know, to buy is easy to say, right? To say the company is good is easy.
Yes.
But the thing is this, to say a company that I sell, sometimes not so easy to actually put it across, right? Now, this particular stock, all right, this particular stock, I invested in 2013-14. And it is actually a company that pays really good dividends, listed in Singapore. Start with the letter S. A lot of Singapore stocks start with letter S, right?
Yeah. It's okay, we are safe. We are
safe, okay.
Yeah.
Now, they have the HQ in Paya Lebar. Okay, so roughly you know where is it? What is it? Okay, never mind.
Okay, so anyway, it's S.
So why is it that I sell it off is because they changed their management. They actually did a business model that's really good, and their business model was actually going in international, just not in Singapore only because of the e-commerce space. And they do a lot of, I would say, 一条龙服务. That means a value chain. And they were changing their business model into that. And the CEO was actually doing quite well. They actually got him from Deutsche Bank, not Deutsche Bank, Deutsche Post, all right, Deutsche Post, and to come over here. And he was the one to actually transform Deutsche Post into DHL. So he was here. Then after that, all of a sudden, I bought it because of the change in the business model. And I see that the business model is really somewhere to go into, right? And even Lazada invested into this company, which is Alibaba invested into this company. So this is where we know the business model, we know the management, and then we invested into it. Suddenly he resigned.
Oh dear.
Yes, he resigned, and then some of the top management also resigned. That's where I cut. I didn't lose money lah. That one I still make money. But when he resigned, what happened is the reason that I buy the stocks is no longer there.
Yeah.
I bought the stocks because of the change in the business.
You had a conviction in the person.
Yes, the person and how he shared the business model. I attend the AGM, and he shared with me, and he shared with all the shareholders. So you see, it's a very logical decision that I actually make, a very rational decision. It's based on a business decision. All right. So this is one of the companies that I actually.
Thanks for sharing that, Pauline. Now you mentioned that you cut loss. You cut fast, but you didn't make a loss. Can you share with us then another example where you cut fast, but you still made a loss?
I cut fast and I still make a loss.
Yeah.
Okay. So
and then just tell us when was it when you start again, and then when do you cut?
Yeah. The other company that or stock that I actually cut was actually a shipping company.
Okay.
Yes, it's a shipping, and shipping is actually what we term as a cyclical company.
Yes, cyclical.
So at that point of time, I didn't know that actually when we invest in a cyclical company, we cannot use the indicator like normally when we see in a company that's not cyclical. All right. So I still use the method of, let's say, the DCF, the DEF, the discounted earnings model to actually value the company, only to realize actually shipping is a cyclical company. So that one, I actually, even though I got very good dividends, okay, because when they were booming, they are really, really good.
Yeah, and they're really fast.
Yes, and and I got really good dividends. But when they are in the downturn, okay, in fact, I must say, I didn't actually really understand the business that well at the point of time to really cut fast enough. Okay. If I really know it's fast enough, at the boom, I actually have to, for this type of stock in the shipping, because of cyclical, need to time the market. Yeah, but I did cut, and at the point of time when I cut, it is a loss in terms of capital of 40%.
Wow, that's quite significant.
But however, it's not that significant because I've collected about 20% of dividends.
Dividends already
collected.
Yeah,
so luckily for that, my loss is less than 20%.
Okay.
Yeah, so that's why the fundamental that is sound is still very important to make sure that this company, their cash flow, everything actually is still very good. They still, this company, this shipping company does not have any debt.
Yeah.
Yeah.
It's just that it's cyclical, and then on the downturn, these are unexpected in a sense.
Yeah.
And I think that's one thing our audience can also take away, Pauline, that no matter where you are at this investment journey, whether you are a beginner or whether you are expert like yourself, there's always things that it's not 100%, Yeah, it's just like if your phone rings now, you can't tell me who's the one calling without looking at it, right? So the idea is I think we all always got to be informed.
Yes.
And always do our research.
Yes.
And how many hours you're saying just now? You can tell the audience again.
It's
3. 3 hours. Oh, speaking about audience, Pauline, we've got a few more questions, okay? This question is, what else can we invest in other than stocks? Okay. And what are the other sectors you are looking at?
Right.
Okay.
So
very quickly, just about 1 minute, because we are running
what else we
short of time.
invest in other than stocks? Actually, to me, a lot of things can invest in properties, crypto. Now, the key thing is not about what else. It's about there's a very important asset that we need to invest that many of you or many of us have forgotten?
Ourselves.
Correct.
Wait, this is not scripted.
See,
Yeah.
it's so obvious, right? Invest in yourself. When was the last time you invest in yourself other than your stomach?
Hey, I was just thinking I invested in myself just now
Good
over
movement,
lunch.
huh? Yes. So really, we got to invest in ourselves in terms of, I believe
you.
everything can make money, right?
Yes, yes.
As long as we have the right knowledge, we have the right mentors, we have the right community, we can make money. That's the key thing I always say. If you ask Warren Buffett, I think will say the same thing.
Yeah.
100%. Yes.
This is Warren Buffett, Asian form female. Asian
No,
female form.
no. I'm just doing this because I think as a layman, I still treat myself as a layman. Yeah, but as a layman, we need to use money every day.
Yes.
That does not mean we have to be really into the financials
Yes.
in order to know how to manage our own money.
Yes.
It's just like our health. I don't need to be a fitness instructor. I do not need to be a doctor to know that my health is important and take care of my health. That's the same thing that, that my philosophy in life. Yeah.
And it's very, very true that, indeed, money is just one aspect of life that we've got to remember the other essence. So, listen to Pauline, invest in yourself first
Yes.
before investing in other things or thinking of investing in other things.
Yes.
Okay, but very quickly, another question from the audience is, can you share how you allocate your own portfolio?
Okay.
Yeah.
That's a really big topic.
Let me be a little bit tricky because we are running down to just 2 minutes left on the clock. Break this down to 2 parts, okay? How do you do it back when you first started as a beginner versus now? Okay, 2 minutes,
Great.
go. Let's go.
Great. So, I'm very stressed. All right. So, first of all, as a newbie, I started off after I learned how to invest 5 to 8 stocks. Okay. So, pick 5 to 8 that I am very, very confident of. How do I know I'm very confident of? I started with this circle of competence. That means I started with the one that I know the best. Why did I invest in BragTalk? Why did I invest in Japan Food Holdings? Why did I invest in Viacom? So a lot of all these first few stocks that I started to invest in Singapore is because I know the business very, very well. I use them. So no one need to explain to me. I know what they do. I know how they earn money. Okay? So this is how I allocate my portfolio into the ones that I know the best. All right? Please do not ask which is the one that will make you the most money because you will not know. Once you know the best, you will know it is going to make you money. Okay? Now, it's just like when we have a child, we never ask how tall he will grow. We will say we give him nutritional food. He will definitely grow. Yeah. This is the key thing that I always say in my portfolio. The first one, focus on the circle of competence. Now, second one, after I've grown
so that's
to better
when initially,
investor,
and
right?
how about now?
Okay, so how about now? How do I actually do that is, I split my portfolio into the parts. Later on, you will hear this. The one that can generate me cash flow options. And the other part, which is for long term. So I heard this from Lauren Templeton, that's really great. And she said, which I also practice, the compounders versus the tactical ones. Yeah, so what does it mean by the compounders? What does it mean by the tactical? Apparently, I don't have much time to talk to you. Come for my 2-hour workshop. Ask me this question again. I will share with you more what is a compounder and what is a tactical stock. Okay? Yeah.
Pauline, your gold class, you just stole my line. I was about to say that time has caught up with us. You want to find out more, head on down for the master class. The QR code was shown just now. If you want to find out any more, you go to V College, right?
Yes.
Okay, you can find them on Facebook and
Google me, lah.
and Google her or just open YouTube. Very privileged to sit next to a famous lady in Singapore and around the region. Thank you so much for your time. On behalf of Tiger Brokers, thank you for being part of WWTD 2022. Right now, ladies and gentlemen, we are investing tomorrow, today, and we have come to our final speaker, saving the best for the last. Going to be talking about something that is probably some of you may not really understand that well. Options, okay? So the next speaker is Rupam Deb, co-founder and director, MoneyWise Smart, speaking about how can options make you a smarter trader.
Good afternoon, everyone. I would like to welcome you all to this session on how to use options to boost your investment returns safely. Mark the emphasis on the word safely. Now, pay attention, stay till the end. From time to time, I'll be asking quiz questions, and there are quite a few nice prizes to be won in form of Tiger coins. Now, meet the MoneyWise Smart team. My name is Rupam Deb. I'm a full-time investor and co-founder of MoneyWise Smart. I am based out of Singapore, and this is my partner, Fan Liang Chia. He's based out of Tbilisi in Georgia. Now, why do options matter? So let's start by looking at a case study with the well-known company, Berkshire Hathaway, the B-class stocks. Now, on 9th of July 2020, just before Berkshire announced their earnings, the share price was $179. And in just about a month's time, after the earnings were announced, the share price shot up by 18% to $211. Now, on 9th of July, I could have, of course, bought the stock and enjoyed the 18% return, but instead, I did something different. I invested $10,400 to buy 160 contracts of the 200 strike call option, which was about to expire in about a month's time. And I invested 65 cents per contract, so that equates to $10,400. Now, I would like to ask you a question. Now, what do you think my return was in place of that 18% jump in the stock price? So the first 5 people who come closest to my return, the return that I enjoyed through these options, get 88 Tiger coins each. So let your answers keep coming in. 160 contracts of 200 strike calls going to expire in just about a month's time. And my investment was just $10,400. Now, instead of an 18% increase in the share price, my return was 15.7x of my initial investment. And that's not a typo. So my $10,400 investment exploded to over $160,000 in just about a month. Now, does it mean options can be used always like lottery tickets? Well, let's take another example. So many of you would know this is the map of a tiny country, Iceland, in the Atlantic Ocean. And how do I know it's Iceland? The easiest way to know is just look at the names of all these volcanoes, and I can't pronounce any of those. So that's the map of Iceland. Now, before I moved to Singapore, I used to live in Europe, and it was April of 2010 when I actually was in London, and I was driving to the Heathrow airport. Can we have the next slide, please? I was driving to the Heathrow airport, and suddenly I heard on radio that this bad boy, it starts with an E, and I can't pronounce the name, it had erupted. And the entire European airspace was shut down. So obviously my flight had to be cancelled, and I was not very happy about it because my anniversary was just around the corner and I was flying British Airways. However, suddenly I got a brilliant idea. Why don't I buy some put options on British Airways? Because, you know, I expected the share price of British Airways to come down. So I thought, why don't I buy some put options? So from the cab on my way to Heathrow Airport, actually on my way back to my hotel, because, you know, the flights were cancelled, I called up my private banker in Singapore and asked him to buy a bunch of put options. And boy, that was one of the most stupidest investment decision of my life. And can anyone guess Why it was a stupid decision? Now, let me tell you something. I just showed you that in case of the Berkshire Hathaway stock, it went up by 18% and my investment exploded by 15.7x. Okay? Now, in this case, the share price of British Airways actually came down by 20% over the week. However, I lost my entire investment even though the share price came down and I had put options. So, whoever comes with the correct answer gets 288 Tiger coins. I'll give you a few seconds to think about it. Now, this is the reason. In options, there is this concept called implied volatility, and it is a very bad idea to buy an option when the implied volatility is elevated. Now, you can think of implied volatility as equivalent to the uncertainty that is there in the market. Now, this is something very similar to, let's assume that I have a home which is just on the edge of a big forest and there is a wildfire that's already spreading. Now, at that point of time, if I call up my insurance company and if I ask them to quote me for fire insurance, you can imagine the premium quote will be astronomically high simply because I'm calling them once the fire has already started. So, here in options, the concept is very similar. So, that is the implied volatility. Now, if I had a crystal ball and if I purchased the put options before the volcano had erupted, I would have made a lot of money. But in this case, I lost my shirt and my pants. Now, there is an option secret. Why do most option traders not end up making money in the long run? And in this session, I'm going to show you how we can be among the small percentage who actually win over the long run. Now, there are two components of an option premium. One is the intrinsic value and the other is the time value or the extrinsic value. Now, I'll take an example. This is the example of an option chain of Facebook, now Meta, and the share price at that point of time was $329.13. So, the $300 call option has an intrinsic value of $29.13 built into it for the very simple reason that if I own the $300 call option, I can immediately exercise it and buy Facebook stock at $300 and I can immediately go to the market and sell it for $329.13. So, which means I will immediately lock in a gain of $29.13. However, if I don't own this option and if I want to go and buy the option right now from the market, it will cost me $53.07, and the excess that I'm paying over and above the intrinsic value of the option is the extrinsic value or the time value. Now, the extrinsic value of an option decays with the passage of time, and this is an absolutely guaranteed phenomenon. So, just like when we wake up, every morning the sun rises, that's guaranteed. So, this is as guaranteed as that. And in MoneyWise Smart, we take advantage of this phenomenon and we come up with our option strategies which make money as the time value of an option decays. Now, there are different types of option strategies. Now, if I'm a long option holder and if I only buy long options, this is how my equity graph will look like. From time to time, I'll have this explosive up moves like what happened in case of the Berkshire Hathaway shares. But in between, for long periods of time, I'll keep losing money because I'll be paying option premium and that will decay out. And I'll have absolutely no control on when the next up move happens. So, market conditions like these are an absolute deathbed for long option holders, because they will keep buying options expecting that the market will move in certain direction, but then the market turns around and they lose the premium. However, this is an absolute gold mine of a market condition for option sellers. So, in a range bound market like this, an option seller would typically sell put options below the lower range of the market and sell call options above the upper range of the market and end up making a lot of money. However, when the markets are going up steadily, this is when the put option sellers end up making a lot of money over time. And this is when you see a lot of bragging social media posts happen, because they are making a lot of money, till something like this happens when the markets turn around. And that's when their face gets ripped off. And the same happens with short call sellers who keep selling calls and make money above a range-bound market till the time there is a breakout, and that's when their face gets ripped off. So when neither long or short puts or calls seem to be working over time, that's when the discovery of credit spreads happen. So what's a credit spread? Here, the option seller would typically take part of the premium that they brought in by selling the short options. In this picture, I have given an example of short puts, and they would take part of the premium and invest in buying a long put slightly below, at a strike slightly below the short put. So that way, their downside is capped. So when the markets turn around and the credit spread will still lose money, but at least their downside is capped, and they won't be losing their shirts and pants because of this. Now, this is a strategy which again can be used and is very often used by a lot of option sellers. So I have taken a case study to see how good a strategy like this can be. So in this case, again, I have taken the Facebook stock, which has been going up, and around May 2021, I sold 5 contracts of the 300 strike put, and I brought in $2 of premium. Now, I took 85 cents of that premium and went and bought 5 contracts of the 280 strike put. So in the process, I entered into a credit spread, and I brought in a total amount of $575 of premium by doing this. Now, the dark blue line on the screen represents where the share price is, and typically when an option seller does a credit spread, after that, he or she just hopes and prays that the share price stays above the break-even point, which in this case is $300 minus the $1.15 of premium that I brought in, so $298.85. Now, is this a good trade? Now, the very high probability of winning in case of credit spreads often make them very seductive. Now, in this case, there is an almost 84% probability that this trade will end up profitable, and I will keep $575 as profit. However, there is just a 16% probability that I will lose $9,400. Now, here is the catch. The problem is, it doesn't matter what happens in 1 trade or 5 trades or even 10 trades. What matters is what happens over the long run. And in MoneyWise Smart, we consider our entire lifetime as the long term. Now, in this example, the right way of evaluating whether this is a good trade to do or a not so good trade to do is if we look at the expected profit. What's the expected profit? It's basically when we add up the probability of each outcome with the payoff of each outcome. When we add all the outcomes, we get the expected profit. Now, in this case, if we keep doing the similar trades again and again, and if we do, let's say, 100 similar trades, in about 84 of them, I will end up making $575, and in about 16 of them, I'll lose $9,425. So my expected profit from this is a negative $102,000. So this is something very similar to if, let's say, I tell you that if you toss a coin, every time you get a head, you pay $1.10 to the market, and every time you get a tail, Mr. Market gives you $1. Now, it can so happen that you have a winning streak of tails, let's say 5 tails in a row, and you end up getting $5. So you might think that you're a superstar, but you know very well that if you do it long enough, that will be a losing system. And that same case is happening here. So in short, this trade was a bad idea. However, from time to time, we identify option setups which can be very interesting, like what happened in 2021 January when there was a lot of craziness going on with GameStop. Now, by the way, I'm not recommending that you buy GameStop, but at that point of time, because of the elevated implied volatility, if I went and sold, let's say, a 40 strike put, and I went and bought a 30 strike put, and I, do, let's say, 10 contracts of this credit spread, I would have brought in $3,300, and this setup would have had a maximum risk of $6,700. However, the probability of winning would have been over 93%, lending itself into an expected profit from 100 similar trades of a whopping $263,000. So when we look for option strategies, we don't care about what's going to happen in one single trade or in 5 single trades. We look for strategies which have a positive expectation, where we know that if we keep doing it over and over again, over time, we will end up being a winner. And unfortunately, most inexperienced option traders miss out on this reality. They think that, they can just go and sell an option and then hope and pray that this option trade ends up profitable, but that's not how professional option participants use options. Now, there's a smarter way of using options, and that's what we do in MoneyWise Smart. Now, to understand that, let's first look at how an insurance business makes money. Now, I'll give you a quick primer. Now, any insurance business has 2 main departments. Now, the underwriting department of the insurance business is responsible for selling the insurance policies. And, all of us buy insurance from time to time, and we know that we have to pay a regular premium to buy any kind of insurance policy. So the the underwriting department sells the policy and brings in a cash flow through this premium. And then they have their expenses where part of the cash is spent, running expenses for running the business. And then as and when they get a claim, they have to pay out the claims. However, there is usually a long time lag between the time when the premium comes in and when the claim is paid out. And sometimes this time lag could be several years or many decades depending upon the type of insurance. Imagine the case of a term insurance where your claim can actually happen maybe over a few decades after you took the policy, but every year to maintain that policy you have to pay the premium. Now, insurance companies, they get to invest this cash which they are sitting on, which is called float, and this cash is passed over to the investing department of the insurance business, and the investing department invests this float. Now, most insurance companies around the world, they invest this in bonds. Now, I'm going to tell you a story. Now, in 1951, there's a gentleman by the name of Lorimer Davidson, and he was the CFO of an insurance company, and he had a historic meeting with this 21-year-old student from Columbia Business School. And that student basically wanted to learn how an insurance business works, and Lorimer Davidson, being the CFO, he explained this whole concept of how an insurance business sits on a lot of float which can be invested in, and that was an absolute aha moment for this 21-year-old student. Now, here is a question for you. Who do you think this student was? Whoever comes up with the correct answer gets a grand prize of 288 Tiger coins. I'll give you a few seconds to think who this 21-year-old student, and the hint is the year of this meeting was 1951. Okay. So yeah, as we saw, the insurance company typically takes advantage of this time lag by investing the float. Now, Berkshire Hathaway owns a lot of insurance businesses, and this is what their chairman Warren Buffett says about the float. This is an extract from one of his shareholder letters. Says, the collect now, pay later model leaves P&C, which is property and casualty companies, holding large sums of money, which we call float. That will eventually go to others. Meanwhile, the insurers get to invest this float for their own benefit. And you can see in 1970, Berkshire Hathaway was sitting on $39 million of float. And fast forward 50 years, 5 decades, that has exploded to $129 billion. That is B with a capital, billion with a capital B of float. So this happened because, of course, the insurance businesses grew, they kept selling more and more policies. But the interesting thing is, the amount that was invested in the float, that has compounded over time, and this is the result of that compounding. In MoneyWise Smart, we basically try to follow the exact same framework. Now, we don't have the license to run an insurance business, but we use options to replicate the same concept of an insurance business. So, we research high quality businesses and we get a good idea of the price at which we want to buy the business, basically the intrinsic value, and we go ahead and sell put options around that price or below that price. Now, the premium that we bring in, we get to invest that premium in whatever good investment opportunities are available. Just like an insurance business invests in that premium. And unlike a short-term trader, we actually keep the capital aside. So rather than hoping and praying that we should not get assigned, we actually hope and pray that we do get assigned, because our objective is to own the business on which the put is sold. So that's how we replicate the concept of an insurance business. Now, following this exact strategy, this is how our monthly cash flows look like. Now, as you can see, every single month since we started keeping record, we have been bringing in a healthy amount of cash flow, which has been going up steadily. And there have been months where we have brought in, 50,000, 65,000. There has been a month where we have brought in $135,000 of cash flows. And the small red bars are basically months. These are, by the way, not P&L graphs. These are simply cash flow indicators. And the red bars are basically months where we ended up buying more options than we sold more options. Now, this cash flow is our float, and cumulatively over the last 4 years, we brought in a total amount of float of almost USD $700,000, but the market value of that float invested in high quality businesses is significantly higher. And that is the beauty of our strategy. So even when the stock prices go down, we know that we have a steady stream of cash inflows to buy these stocks at a deep discount prices. Now, real wealth is not created by speculating on the direction of short-term share price fluctuations. It is created by owning high-quality businesses over a long period of time. And we use our option strategies that generate ongoing cash flows to fund the purchase of these high-quality businesses. Now, the cash flow not only funds the undervalued stocks, it also pays for my lifestyle and my travels around the world. I'm an avid traveler, I'm a backpacker, and these are some of the pictures of some of the backpacking trips to some of the remote countries in the world. The one on the bottom left is Tuvalu. That's one of probably the least visited country in the world. And you can see actually the national rugby team practicing on their runway, because they just receive 3 flights in a week, and rest of the time, the entire country, all the youngsters, they go and play football, volley, etc. on the runway. That's my son carrying his lunch in Tuvalu. That is me sitting with some local fishermen in a remote fishing village in Fiji, having a local drinking ceremony. And that's my 5-star accommodation in Samoa on the beach of the Pacific Ocean. You know, this is me traveling the same flight as the Vanuatu Prime Minister. He happened to be there. Several pictures from my trips around Latin America. Now, the reason I'm showing you these pictures is because each and every of these trips have been funded by the option cash flow that I have been bringing in. And my travels around the world not only broaden my mind, but it also makes me a better investor. Now, our investment track record using the same strategies is something that we would like to share with you. And you must be thinking that, okay, what does all this boil down to? So this is what it boils down to. Now, I believe that a lot of people brag about their track record over the last 3 months, last 6 months, or even a year. Now, any track record less than 5 years' time should not be taken seriously, because in the short term, anything can happen because of the market volatility. Now, as you can see, the blue bars are our returns, and over the last 5 years, the S&P 500 has returned a compounded 14.4%, whereas our return has been over 22% compounded over the last 5 years. So we have decimated all the indices over the last 5 years. And this happened because I was committed to learn to invest the right way, and I followed the right framework, which comprised the ability to identify and research high quality businesses, ability to generate cash flows using option strategies to take advantage of the best opportunities, and develop the right temperament, which is very important. And even when the markets are crashing, like many of the growth stocks have been crashing the last month or so, but I have been sleeping like a baby, because I know that what I own are these high quality businesses. And this, when the stock markets crash, I actually celebrate, because I know that I have a steady cash inflow which is coming in to take advantage of these great opportunities that Mr. Market is throwing at me. Now, expertise in any domain is not achieved overnight. Whether it's expertise in sports or music or maybe medical sciences, it takes a lot of practice, lot of commitment to build that expertise. And in moneywisesmart.com, we help our subscribers to build the expertise by using options the smart and safe way. Now, I have already talked to you about these two phenomena. One is the steady time decay that all option premium, the time value of the option premium goes through, and the sudden explosive jumps of the implied volatility, which we can't predict, but we can position ourselves to take advantage of. Now, we use a combination of these two option phenomena to design innovative strategies that generate cash flows when we need it the most. And we teach our subscribers exactly the same strategies. So I would invite you all to actually check out our free option series preview, which there are two ways to access it. One is you can go to the WWTD landing page and scroll right to the bottom where you'll see all the logos of the partner outlets. So there, find the MoneyWise Smart logo just beside the SGX logo on the right hand top. If you click on that, you will see the option series preview, which is absolutely free to join. I encourage you all to join that. And the other way of finding that page is if you go to the moneywisesmart.com website, on the top menu, you will see courses. Under courses, you will see the option series preview. Now, I'm going to do something very special for all the Tiger Broker subscribers. Now, for everybody who joins the free preview, which is absolutely free to join today, by the end of the day, we are going to soon announce a special 2-hour session where we are going to introduce many of these innovative strategies that I have talked about. Now, I know, the time was limited, and today I just scratched the surface, but it is unbelievably powerful what you can do using options. And as I said, we don't think like short-term option speculators. We use options as a way to fund our long-term purchases. So for us, if I think of it as if I think of my personal balance sheet, my long-term investments sit on the asset side and my option strategies sit on the liability side, which is a way to fund these long-term investments. And I'm going to teach you in that free 2-hour session how to use these option strategies. So thank you very much, and over to Mark.
Wow, thank you so much for that very in-depth, even though you just scratched the surface, Rupam, it is really insightful, and I'm sure our audience, whether they are new on this journey or whether they are an expert in this investing journey, they have appreciated your valuable insight and sharing about options. Now, very quickly, Rupam, we've got some questions from the audience.
Sure.
Let me just read it out for you, okay? The first question is, we would sell call options to enhance cash flow while holding on to long-term shares. What happens if we get striked? How do we hedge this? Okay.
Okay. Here, they are basically talking of a strategy called a covered call, where they have the long-term shares and they sell short call options above that. Now, this is a very common strategy, but the problem happens is exactly what this person mentioned.
If we get striked.
Often, your stocks get called away. Now, imagine how would you feel if you own, let's say, Tesla shares which you bought at, let's say, $100, and you sell a call option at 120 and the stocks get taken away, and then you hopelessly see that the share price has shot up to $1,000.
Yeah.
How would you feel?
Yeah.
So while doing covered calls is very common, we do not recommend it for this reason. We teach strategies which are actually much more robust, and they do not cap your upside.
Okay.
Because it's very seductive when month on month you get to bring in the cash flow selling covered calls, and that's exactly what I showed.
Yes.
What happens to a short call seller?
What we saw earlier.
But then it's very sad when a high quality
Is
business
that sustainable?
Exactly.
Yes.
Gets taken away.
Yes.
So remember, we are not teaching people how to make money for a few months.
Yes.
We are teaching people how to make money for decades, for your entire lifetime, how to generate the cash flow.
That's right, Rupam. Like you mentioned, using options for your long-term.
Absolutely.
Yes.
Long-term wealth building.
Yes, that's right, and your long-term goals. Let's bring us to the next question here from the audience once again, Rupam. Do you need a lot of capital in executing this strategy, referring to selling parts and being exercised to own a piece of the business?
Mark, every time I got asked this question, if someone paid me $1, I'll be a very, very rich person right now.
So to our audience right there, you're getting it free.
No, actually, this is a very good question. This is a very good question and a very common question.
Let me just read it out one more time for some of the audience that might have missed it.
Sure.
Do you need a lot of capital in executing this strategy? Okay, referring to selling parts and being exercised to own a piece of the business.
Look, as I said, we believe in owning long-term businesses.
Yes.
Right? Businesses for the long term. So we don't look at the options as a separate silo.
Yeah.
Like it's not as if, okay, this is my long-term strategy and this is my option strategy.
This is separate. No.
The way we do it is we integrate option strategies along with long-term investing.
Yes.
So what we teach is you don't need a separate box of capital only to run your option strategies. Let's say if you want to buy a stock which currently is trading at $70 and you want to buy 100 shares of that, but you only want to pay $50 because you feel the stock is overvalued.
Yeah.
So you would keep $5,000 aside, right?
Yes.
So the same capital can be used to extract cash flow from your option strategy. So it's not a separate capital, and that is the beauty of how we do options. And I'm actually going to go further into details in that 2-hour free session. It will be on Zoom, that I talked about, which you can register by registering in the free options preview.
Okay, but I guess the essence of this question here is beyond the theory and the how-to, beyond the head and the hands portion, but I think the heart of this question is addressing the emotion of perhaps fear. In a sense, do you need a lot of capital, because people tend to get a little bit fearful, uncertain, and have some doubts in a sense, but, FUD. But the thing is how do you address that,
Absolutely. Now, this happens because most of the people, most of the market participants, they are very fearful of market volatility.
Yes.
They think that volatility is something to be scared of.
Yeah, and it's not a good thing.
Whereas we actually celebrate market volatility. Let me ask you a very simple question. Let's say you own an asset. Let's say you own a property.
Yeah.
Okay? And you know, that is your home, you really enjoy living there.
Yeah.
And your neighbor, maybe he lives, you know, slightly away from you and you don't know the person, and out of some desperation, maybe they are going through a divorce or some debt or something, they are forced to sell their property at a deep discount price.
Yes.
You know, which is, let's say, at a 40% discount.
Oh.
Now, should that worry you? Now, what a market price of a stock basically is a record of transactions that has happened for those businesses. Now, as long as I know that I'm going to be owning this business for the next 10, 20, 30 years, you know, and as long as I know that I have a steady cash flow coming in, I will actually look for market prices which are discounted because I can buy more of these, more of something that I really like.
Yes, and knowing the value, the actual value of it.
Absolutely, because my focus is going to be on the actual value of that.
Okay. So, ladies and gentlemen, our audience, wherever you are at, whichever time zone, you heard it from the man himself that really it's about the conviction of what you're buying into.
Absolutely,
right?
Because what we own is not the share price. What we own is a slice of a business and the value that that business offers. And we teach how to analyze and how to estimate the intrinsic value of a business. So that is what we own.
All right, the questions just keep coming in. Okay, Rupam, very quickly, another question from the audience. We are running out of time, so can you explain what is delta hedging?
Delta hedging is again a term which traders use because, you know, options. Today we don't have the time to go into details, but options have different Greeks. A delta of an option is basically a Greek which identifies that if the stock price moves by a certain amount, by how much will the option position move? Now, the question of delta hedging only comes into the picture when I am trying to speculate with options. But as I said, in MoneyWise Smart, we don't speculate with options.
It's for the long term.
So for us, once we sell an option, the cash flow has come in. After that, I don't need to hedge any delta because I want to get assigned. I have sold a put at a price where I want to buy the stock. You know, so if the share price,
you need to buy it already.
Yeah, exactly. So I'm hoping that my option gets assigned, and I get, because my capital is already kept aside to own the stock. So we long-term investors, we think slightly differently from short-term speculator. So when you're speculating, when you have sold an option, you know, you need to hedge your delta because otherwise your option position will lose value.
Yes.
But for us, as I said, my option position is just a source of my funding.
Yes, yes.
So
it's together, it's not separate.
Yeah, exactly.
Yeah. Like Rupa mentioned. So I guess it's a lot about your perspective and how you adjust that perspective in your thinking, and then from there, no hedging needed.
Absolutely. And trust me, I mean, I'm extremely, in fact, you can call me an expert in delta hedging because my early days when I used to be a short-term trader, I used to do a lot of delta hedging. But over time,
you've realized
I have wisened up, and I realized that over time, the way we use options now, following, you know, the example of Berkshire Hathaway's insurance business that I said, it's far more lucrative because first of all, I'm not speculating on short-term moves, so I can sleep tight rather than, you know, worrying about the short-term move. And I also don't get my long-term, you know, crown jewels get taken away by these covered calls, you know. So I have the entire upside open to me. I mean, that's how I get my multi-bagger. So there have been cases where I bought a stock and now it has been a 15-bagger, 20-bagger because my upside is never capped.
You know? Well, thank you for sharing that, Rupam. We have come towards the last minute of this segment. But before we go, and audience, I hope you have gathered a lot of insight. And from Rupam, you also heard that when he was younger, he made a lot of different decisions because he was from a different perspective back then. But the current position he's at and how he has, quote unquote, wisened up in a sense, what he's sharing with us is indeed invaluable. So before we say goodbye to the audience for this part of the segment, any last words for them?
Yes. If you are an option participant,
Yes.
before you enter any option position, always ask yourself this one question: what if I'm wrong? The biggest problem that many inexperienced option traders face is they enter into an option position hoping and praying that,
right.
it will go in my direction, I'll be right. Yeah. But then there is always a probability, however small it is, that it will not.
Yes.
And you need to ensure that when that happens, your face doesn't get ripped off. So that risk management is the most important thing that you need to keep in mind. And that's why the emphasis on the word safely. That's what we teach.
All right, so you heard it once again. Leave a thumbs up if you've really been enriched by Rupam. Once again, Rupam Deb, co-founder and director of Money Wise Smart. Thank you so much for joining us.
Thank you, Mark, for having me.
On behalf of the Tiger Brokers team, we want to thank you for just taking your Sunday afternoon to join us.
It's a pleasure. Thanks for having me here.
Now, without further ado, I know I mentioned that Rupam is the last guest, but ladies and gentlemen, he's not. Because guess what? We've got one last one coming up. And that person will be talking about futures. Looks like I couldn't see into the future, ladies and gentlemen. So the next speaker, Lee Chi Wei, Singapore Exchange, futures and margins. He'll be talking about that, the fundamentals. So without further ado, stay tuned, guys. Aha! I've teleported once again for the very last time today. I'm here in a new stage with Lee Chi Wei, Senior Director, Head of Greater China Business Development, Singapore Exchange. Chi Wei, thank you so much for taking time off on a Sunday afternoon to join us here. Really appreciate, on behalf of the Tiger Broker team, welcome.
Thank you for having me.
Okay, now, very quickly, can you just share with us a little bit more about yourself? What do you do, and how long have you been doing what you're doing?
Sure. So my name is Lee Chi Wei. I've been with the Singapore Exchange for 15 years.
Okay.
During the 15 years, I've moved between the different roles. So I started off in the securities market, helping with product design and development. Then I moved on to risk management, which is actually the core business of an exchange.
Yes.
And 3 years ago, I joined the sales team covering the Greater China business development.
Yeah.
So,
which is where you are now.
That's right.
Okay.
That's right.
Okay. Wow. Indeed, a man full of experience in different areas at the Singapore Exchange. Now, very quickly, since we are on the topic of futures, first question for you, Chi Wei, would be, what is a futures contract?
Yeah, that's a very good question. Because a lot of times people are familiar with the securities market.
Yes.
So the cash equities, people are
and rightly so, because it's more, in a sense, popular.
That's right. That's right. So, but then again, there are the futures that can also be used to help you manage your exposure. So to help guide this conversation, I prepared some slides, which I'll use to illustrate my point.
Let's have a look.
Yeah. So to your question, what is a futures contract? Well, futures contract is an agreement between two parties to buy or sell an asset at a specific time and at a specific time in the future, and also at a specific price. It can be used to hedge the existing stock portfolio, because usually such an instrument is linked to an index which is computed based on the prices of a basket of shares, for example. And you can also use futures to gain leveraged directional exposure, either long or short, to a basket of shares. So what are some of the characteristics of a futures contract? Well, first of all, they are exchange traded. The good thing about this is, of course, that it pulls the liquidity together onto an exchange so that people benefit from the pooled liquidity. It is also of a standard contract size. So it's easy to track and manage the exposure. Lastly, there is also mark-to-market when it comes to managing the exposure. This is very important because you want to get that P&L, profit and loss, computed and factored into your portfolio as early as possible. So as far as the futures contract is concerned, we have what we call margin cycles to compute that exposure. There's also the margins and the settlement, which I'll go through in more details later on. Now, what are some of the factors that will influence the futures prices? Well, I've listed out 4 here. You have the price of the underlying asset, you have the interest rate, you have the dividends, and you have the time. But I just want to remind the audience that most of the equity basket futures are traded in the near month. So the impact from, for example, interest rate and dividends are less when it comes to the pricing of the futures. It is the underlying prices of the basket of shares that will drive the change in futures prices. And also want to take this opportunity to just use a contract, in fact, our most popular contract, as an example of how to read the contract specs. I just want to remind the audience that all this information can be found on the Tigers platform. And so please feel free to take a look at it and so to understand your investment a bit better. The first thing we need to note is the contract size. This refers to the exposure you lock in when you enter into what we call a one lot of futures contract. Okay? The minimum price fluctuation, it tells you how much does each index point represent when it comes to calculating the exposure. There's also the contract month. You have to trade in the same contract month in order for your positions to be net off or aggregated. So in the case of our most popular A50 contract that is linked to China, we had the 2 nearest serial months followed by the quarterly month in the next 1 year. So the trading hours are 9 to 4:30, and in the T+1 session, 5 p.m. to next day 5 a.m., 5:15 a.m. This is in fact a very key difference between futures and equities. In the case of equities, when the market closes, usually during the day, that ceases the trading. But in the case of futures, as you can see from here, it trades well into the night, in fact, the morning of the next day. And so it allows you maximum time to manage your exposure. There's also the last trading day. As we mentioned earlier, futures contracts does expire. So you need to take that into consideration when you manage your exposure. There's the price limit. Now, in the case of SGX contracts, we don't close the market. We adopt what is known as the speed bump. So when a certain percentage of the underlying price movement is observed in the market, we slow down the trading of the market so that the market has time to think about where it should go next. There's the settlement. Now, this is very important. When you go into a contract, we offer cash settlement and physical settlement. So you need to be careful. Now, the good thing is, in the case of equity contracts, most of the contracts are cash settled, right? So even if you forget to roll your position, you will just be cash settled, and that's it. You won't be on the hook for delivering rubber or other physical goods. Lastly, how do you work out the final settlement price? Well, it's basically the cash index that is computed by, in this case, FTSE, that will be used to settle your outstanding position that is expiring. Blocks and NLTs, these are more for the professional traders, where they can trade in big blocks, right? But in the case of retail, we seldom see this function being used.
Okay.
Yeah.
Wow. Thank you for sharing with us all of that specifications and how to understand futures contracts. Now, speaking about futures contracts, Chi Wei, can you tell us what's the difference between trading cash versus futures?
Sure. That's a very good question, in fact. Yeah, so to make it easier to understand, I've also prepared a table here. Yeah. And we get this question a lot, right? So in the case of cash stocks, like the ETFs, the DBS shares, right? They are known as the cash equities, and they sit on a different market offered by SGX. In the case of futures, they are listed on the derivatives market. So they are two distinctly separate markets. In the case of settlement, for cash equities, you pay the full principal amount in cash, and you own the shares, right? They can sit with your broker, or they can sit with CDP. In the case of futures, you need to pay the initial margin to hold on to that position, and you need to honor the ongoing mark-to-market until that position is either settled, i.e. expired, or you close it out. Now, what accounts do you need? Well, you need a securities trading account for cash stock, and you need a futures account for trading of futures. In the case of Tiger, I noticed that you need to move your funds between the two accounts. This is basically to address the two distinct marketplaces that we have on SGX, so that as a result, you need to fund your two accounts separately in order to engage in the trading of shares or futures. Now, the ability to short the underlying. In the case of cash stocks, you need to go borrow the shares either from the broker or make your own arrangement before you can short sell the stock. But in the case of futures, you don't have to do any preparation. You can just right away and go ahead and sell the futures. Now, expiry. The cash stocks have no expiry. You can own a DBS share, pass it on to your kids. But in the case of futures, as I mentioned earlier, they are scheduled expiry, which you do have to roll into the next month if you intend to hold on to that position. So it gets a bit tricky there, that you have to remember the expiry date of the individual contract month and manage accordingly.
Okay, thank you for that. Now, indeed, when you talk about expiry date, maybe for some of the viewers that are new to the concept of futures, what is the duration for it, and how long? What's the minimum and maximum for that?
Right. Most of our contracts are of 1 month long. Right. So the expiry dates are usually towards the end of the month.
Okay.
Right. So the users should kind of also closely remember, right, when the contract is settling, right, and manage accordingly, or else you will be cash settled.
Yes. Okay. So once again, very important. If you're ever thinking of going into futures, you got to remember, like what Chi Wei mentioned, right, Chi Wei, that you just got to remember that it's end of the month.
Yes.
End of the month. Yeah. Okay. Now moving on to the next question, then, Chi Wei, why managing China equity is important?
Right. Sure. Now that's you know, because China is the biggest market in this time zone, right? So we definitely want to talk about that. But before we go into that in more details, I'd like to also share a little bit about the obligation that you need to take note of when you hold on to a futures contract.
Okay.
Because earlier we talked about initial margin and mark-to-market. So I just want to illustrate again.
Okay, right? Sure.
But before that, I just want to remind the audience that Singapore Exchange operates a membership system, right? So we manage our members, and our members manage their clients, right? So under that approach, the members can do what they deem is necessary, including imposing a higher margin than what the SGX prescribes, if they deem that as necessary. So this is very important, yeah? So in the case of using margins to hold on to a position, you need to first have initial margin. That is the amount you pay to hold on to that position. And in between what is known as margin cycles, you need to make sure you have sufficient funds to meet the losses. In the event you incur losses, you need to make sure you have enough funds to meet the losses so that you don't experience a margin call. However, if you fall below your margin with the broker, they will margin call you for it, right? And you just need to make sure you have a good understanding and tracking your exposure at all times. Now, moving on to China. Yeah. But before we talk about China, which is a very exciting market, I want to also just show the audience the exposure that we offer through our multi-asset platform. So as you can see here on our derivatives platform, we offer exposure to Japan, to Korea, to Taiwan, to China, to India, and to ASEAN countries. Yeah. Now this is very important because the best thing about offering so many exposures is that on one single platform, you can gain exposure to the different asset classes. For example, FX, equities, and commodities. Right? So amongst all these exposures, the biggest exposure we have is, of course, China, A50, that we talked about earlier. Right? And just want to share with you on the top left-hand side, as you can see here, it is by far the most active contract on SGX with the most open interest. Now, for the audience out there, I just want to explain what open interest means. Open interest simply refers to the outstanding position that's not closed in the market. Okay? So people holding on to long positions, people holding on to short positions, the total value of their outstanding position is illustrated here, right? So this will help you to gauge how liquid the market can potentially be, right? And the more liquid the contract, the less likely you will suffer big slippage when you go in and out of the contract. So A50 is by far our biggest contract. And this market is very important for a few reasons, right? Because one, it's the largest economy in our time zone, and it may soon overtake US as the biggest economy in the world. Two, given the ongoing COVID restrictions, what's going to happen when the border restrictions are lifted, right? So a lot of people are looking at it. And of course, there's also how China interacts with the regional economies. So that's why, as I mentioned earlier, the concept of a one-stop shop and a multi-asset platform is very important. Now, we also offer Nikkei contract, which doesn't need much introduction. It's still the most representative underlying or index of the Japanese economy, right? We also offer the FTSE Taiwan Index. This is, in fact, a very important contract of ours because Taiwan, given its exposure to high-tech industry, so we see a very good trading in this contract as well. Lastly, there's also the Nifty contract, which is a reflection of the second largest economy in our time zone. And we are going through a collaboration with the onshore exchanges, and hopefully once that is done, we'll see more liquidity in this contract.
Okay.
Yeah.
Since the question is up, why don't we just go ahead with the next one?
Yeah.
Why use SGX Equity Index Futures to gain Asia exposure?
Sure.
I think that may be on the minds of some of our audience, and in light of WWTD investing tomorrow, today, you can share about this.
Yeah. So a lot of times it's difficult to pick out the winner from a basket of, from the market, so to speak, right? Yeah. So you may want to take an index approach, i.e. buy or sell a basket of shares as your entry into the market, right? So the fact that the futures allow you to do that, on top of the fact that it also offers you leverage exposure, that gives you maximum capital efficiency, right? So for example, China, such a huge market, right? Picking out the winner may be difficult. So what do? You use the A50 to express your investment view on China, right? There's also the fact that it trades for a long time, and in fact, out of 250 business days, we only close on the 1st of Jan. Okay, so that offers you maximum time to manage your exposure. Lastly, as I mentioned earlier, that there's the T+1 angle to all of this trading, right? T+1 refers to the night session. Now, the trading doesn't end at, in the late afternoon. You can still trade your exposure at night in the US Euro time zone. So that it allows you to manage your exposures at all times. Yeah?
So, okay, we briefly spoke about this, but
yeah.
very quickly, can we ask, how do spread trades unlock more trading options?
Okay.
Yeah, to help us understand the fundamentals of futures and margins.
Okay, so that's a very good question. I don't have a slide for this, but I'll just talk through it. A lot of times, futures trade in different calendar months, right? So you can long one calendar month, short another, to express your view that in during different months, how would the market move?
Yeah.
Okay, so you lock in a spread rather than taking an outright view on the market, right? There's also another form of spread where you can long China and short Taiwan, right? So that's also another view that you can lock in, right, to express a view. These days, we seldom see very outright trading, right?
Why is that so?
Okay, a lot of the markets, people are looking for relative value.
I hear you.
Right. So what they do is they express and manage their exposure through locking in a spread trade.
Okay.
Right. But for a more simple application, you can still use a futures contract to express an outright view.
Okay.
And an efficient one.
Yeah, all right. Well, we hope you've gathered some information about that on how spread trades unlock more trading opportunities. Very quickly, you spoke about many nations here. The largest one in our region, in our time zone, China, and the second largest one, India. But let's move on to Japan. Very quickly, why are Japanese equities gaining eyeballs in a sense?
Right. You see, okay, I'm not recommending a long or short on the
disclaimer is there.
Yes. Yeah. But Japan has always been a very important part of the international economy.
Yes.
Right? If I'm not mistaken, I think it is the third largest, right? So, and of course, the yen is always a safe haven currency. So, the combination of that kind of puts Japan on the investment map. And you need to think about, okay, do I need to express a view on Japan, right?
Yep.
So right now, what's happening in Japan is that following the Olympics, we understand that they are going to do something to sort of revive the economy, right? So the question is, what can we do there? Can we leverage on that news and express a certain investment view? And partly because of that news, we have also seen Nikkei gone up quite substantially, right? So it's all about monitoring the news and kind of translate that into investment objective, right?
So in essence, it's always about keeping up to date, being informed, doing your homework instead, your research, and then making the informed decision. Now, moving back again, moving you across the globe.
No
back to China, just now we mentioned about managing China equity risk. Maybe you can tell us more a little bit on that through anything that you've prepared for us.
Sure. Yeah, as I mentioned, that China is the largest economy in this time zone, right? In this region. So it's important that you kind of want to factor that in when you take on a more portfolio approach in your investment, right? So in the case of China, right now their inclusion into global indices is in progress, right? And it's been phased in every quarter, and so gradually you will see China playing a bigger role in a lot of the global indices. Right? There is also the volatility. I think this we need not go into the details, right? But what's happening with the ADRs in the US, the Hong Kong market, you can see that there is a lot of volatility. And volatility is not necessarily bad. Volatility also allows you to profit from it, right? Especially through a contract that allows you to go long and short without additional preparation, so to speak. Lastly, at this moment, China's allocation or allocation of funds to China is still relatively small, right? So you kind of want to start early rather than wait until everyone is in the market, value discovery has all happened, then join the market late, right? So these are the factors you should really think about when it comes to positioning yourself for China.
Okay, thanks for that. We've got a question, Chiwei, from the audience. Let me just read it out here. A very simple question here. What's the difference between futures and options?
Very good question. So the earlier session was about options.
Yes.
Right? So in the case of futures and options, there are two derivative instruments.
Yes.
Now, in the case of options, you trade implied volatility on a market. Now, in the case of futures, you just take a linear view on the underlying, right? So in the case of that, let's use Nikkei as an example. Nikkei, we offer both Nikkei futures and Nikkei options, right? So in the case of Nikkei options, you trade the implied vol. The price reaction may not be linear, okay? But in the case of futures, every point or percentage in the underlying movement will reflect accordingly in your P&L. Yeah, so that's the difference.
Okay, right now as you have answered that question, the difference between futures and options, there's another question coming in. Let me just wait for them to show it to us. Now, Chiwei, does buying futures require some form of estimation of the market trend? Earlier you shared about how it's important to be up to date with the news and be informed, but how about keeping up some form of estimation on market trend?
Yes. In fact, when we engage our clients, let it be retail or institutional clients, I think one thing we find that people have in common is they want to express a certain investment objective, right? Now, the best way to form that investment objective is, of course, to kind of do your own research.
Yeah.
Okay. Now, the good thing about Tiger, in fact, is that I noticed that they provide a lot of market information and also a platform for investors to exchange views, right? And I do definitely encourage you, especially in the case of a leverage exposure, to understand your investment objective before just taking a position. So to answer this question, yes, you do want to form your view before taking a position.
Okay, thank you for that. Let me go on back to the agenda for today. For audience with any more questions, feel free to ask them in the comments section below. Now, what does SGX FTSE China A50 futures have to offer? Perhaps maybe the question on some of our audience mind. Maybe you can share with us.
Okay, so in fact, perhaps allow me to just talk through this point.
Sure.
SGX, in fact, offers a very interesting combination of China exposure. We offer the A50, which in fact, if you look at the contract specs, it's more of a reflection of the older China economy.
Yes.
But at the same time, we offer what is known as the H50, which represents the newer part of the economy. For example, a lot of tech companies, right? And a lot of, there's still some financials, but more focus on the tech companies. So just imagine if you come to SGX or if you have a futures trading account with Tiger, you can come to SGX and trade the old and the new economy. And that in itself, that's right. Yeah. And that in itself is also a spread trade.
Yeah, it is.
Right.
It is.
Yeah. So just in the market, there are different ways to express your views and to extract that relative value through the use of futures.
Okay. Is that only typical for the China market, or is that the same for other markets around the region that we have mentioned, India, the Nikkei, and Japan as well?
Oh, okay. Yes, but to achieve that
it's a bit more complex.
Yes.
Okay, but maybe just to whet the appetite of those in our audience that are a little bit more advanced in this investment journey, maybe you can share.
Yeah. So we, in addition to offering what is known as the index-based futures, right?
Yes.
We also have some single stock futures, for example, in India.
Okay.
Right? So you can use different instruments, especially different futures, to express your view. And it's going to be a very customized view because you are not just taking an outright view on the market. You are now using a combination of futures to express a certain very customized view. Right? So for the more advanced audience, right, they can do take a look at what we offer, and you know, think about how you can use a combination of futures to express that view. So in the case of India, I've talked about it. We have the index futures, we have the single stocks, and in some cases, no, those can all turn into very interesting investment strategies.
Yes. So indeed, it's all about monitoring it and looking at it. Now, speaking about futures, the future is now, as in like crypto is here and here to stay, definitely. It's been a controversial topic we have had over the past 2 days. But here's the thing, does SGX intend to offer crypto-related futures anytime soon? Once again, Chiwei, this is a question from the audience.
We get that question a lot.
Yeah.
At this moment, all I can say is that we are looking into this.
Okay.
We are monitoring this development very closely.
Okay.
Given how Singapore is very, friendly when it comes to onboarding such developments, right? And so we are monitoring this very closely and working with our regulators to assess the situation to see if we could do something in this space.
Okay. All right. So you heard it from them. They're monitoring. So just wait, be patient, and they will definitely share when. Yeah. Or you can check out the Tiger Brokers app too.
Yes.
The news may be there. Okay. All right. So Chiwei, just a personal question for you then. In your investment journey, when you first began dabbling into futures and margins, how was it like for you? How do you feel at the time?
Okay. Now, I just perhaps allow me to share 3 advice with the audience. When it comes to investing, do start early, okay? Because money in banks, putting your savings in bank, you earn some interest, right? But I think...
But you lose it to inflation.
Exactly, exactly. So, could you consider investing in some of the blue chips or some of the companies like, the banks that will benefit from, inflationary pressure due to interest rate going up, right? So do start early. See, SGX offers 100 shares as a minimum ball out size, right? So that is something you should look into. Now, the other thing is understand or work within your means, okay? Don't over leverage yourself.
Yeah.
A lot of times people get a bit excited when they make their first dollar. Okay.
They get overboard after that.
That's right.
They're on that high and they just keep going.
Yeah, I've made my first investment dollar, right? Yeah. So I want to do more. Let me go borrow money to do this. Yeah. We usually advise against that. Okay. You should really think about doing it for just so that you don't take on too much leverage exposures. Okay, and lastly, do your homework. Yeah. Especially for the younger audience, try not to just work on what is known as the market tips. Try to do your homework, especially through a platform like Tiger, where they offer a lot of in-depth information analysis. Look at the information to make sure what you want to put your money into is indeed meet your investment objective.
Yes.
So those are the 3 advice I'd like to share with the audience.
Okay, that's right. Audience, you heard it. First is always to stay hungry, but not very hungry, okay? If you earn something, your first dollar especially, don't go overboard, all right? And secondly is to
Start early.
Yes, start early, yes.
Yeah.
Start early is the first.
Yeah.
Secondly is to not be so hungry.
Yeah.
All right, you can earn, and then after that, do your homework. Very important, okay? I think that's the central theme we've always been hearing from all the esteemed speakers over this weekend, that really it's all about doing that homework, doing that research, understanding, reading the news, understanding the companies that you are buying into, the sectors in which you are interested in. So those are the 3 tips you would wish you had known when you were starting out.
That's right.
Okay, how about now? What's the journey ahead for you? What's the future like in your trading journey? Maybe you can share with some of us in the audience.
Yeah, so for me personally, I am, in addition to monitoring what's happening in Singapore, with all the talks about the spec listings, right?
Yes.
One thing I'm also monitoring is the new China economy, because I'm sure a lot of the audience would have noticed that the Chinese tech companies took a beating recently.
Yes.
Right? And so the question is that going to continue, or is the trend going to reverse, right, as Chinese New Year approaches? So I'm also monitoring that very closely.
Yeah.
And just to share that I don't intend to pick out the right winner, because that single stock volatility may be too much for me to take. So what I intend to do is perhaps express my view through the futures, like the H50 futures. That's a good place to start. And also, I just want to highlight that a lot of the contracts that we are rolling out these days are much smaller than the older contracts. For example, the Nikkei. Nikkei is a big contract, right? The multiplier is big, and the index is big. So as a result, one lot is a big exposure. But a lot of the newer contracts, including the A50, the multiplier is just $1 US. In fact, that's very small. Let's consider mini in the context of US futures. So that's what I'm monitoring.
Okay. Thank you for that. Chi Wei, it's been a pleasure having you. Now, before we go, time has caught up with us, but before we go, any last words for the audience here in Singapore, as well as those joining us from and around the region?
Yeah, I think Singapore, in fact, is a very interesting location when it comes to investing. In addition to just our homegrown companies, we also have, in fact, a lot of foreign companies. Yeah. Right. Likewise, in the case of our futures, in addition to the Singapore futures, we also have a lot of foreign exposures across asset classes, in fact. Yeah. So do think about how you can use that as a one-stop shop to fulfill your investment objectives.
All right.
Right. So that's the last thing I want to share with the audience.
All right, ladies and gentlemen, once again in the hot seat, we've got Lee Chi Wei, Senior Director, Head of Greater China Business Development, Singapore Exchange. His 3 tips, once again: start early, don't go overboard, okay? You can be hungry, but not too hungry, especially when you see or make your first dollar, and do your homework. All right, that really brings us now to the end of our wonderful 2 days of WWTD 2022, Investing Tomorrow, Today. Now, before we go, I just want to thank all of you for tuning in throughout the past 2 days, spending time with us, investing in yourself for your tomorrow, okay? All right, so before I go, I just want, once again, just to highlight the Experience Store, okay? That's right, it's happening now. We've got about just over 2 hours more. Tiong Bahru, Yong Siak Street, 7 Yong Siak Street, okay? Claw machine is still there for you to win awesome prizes. 888 Tiger coins, and the rest you can see. You have heard me over the past 2 days. Go on there now. It is now or never, okay? These are the participating outlets. Chapter 55, Tien's, Old Shifu Charcoal Porridge, Drips Bakery Cafe, and of course, find our Tiger Dolls to stand more chances in your claw machine, okay? Now, shuttle bus ends at 7:30 though, okay? 30-minute interval, so there we go. Oh, I beg your pardon, last bus is at 7 p.m., okay? Last bus is at 7 p.m., all right? Now, today is also your last day on our Tiger app landing page for you to click on that yellow egg, okay, on the landing page there. What you'll get is vouchers up for grabs, okay, for you to spend at participating outlets and merchants, okay? All right. Now, for the beginner investors, those that are just starting out on this journey, we've got a starter pack for you, our UT starter pack here. Expose yourself to global equity and global bonds safely, okay, and get $50 off, all right? This is an exclusive WWTD promotion going on. Scan the QR code, or you can go to our Tiger app in the Discover tab, okay? Click on the Fund More banner on top, and then you can find out more information there. Do your homework, read up more, okay? And exclusively for university students, if you are considering a career in asset management, here's what you got to do, okay? You got 2 hours more if you have not already done so, and you feel inspired over this weekend, head on down to our experience store, complete a quiz, okay? Don't worry, not very difficult one. Complete a quiz and you'll stand a chance to be invited for a networking brunch with one of the 4 fund houses that we have here, Fidelity, Franklin Templeton, Lion Global Investors, as well as UOB Asset Management. All right? And of course, we've got 0 subscription and redemption fees, 0 interest on margin loan under USD $1,000, and 0 commission for micro futures. Scan this QR code, all right, to find out more. Again, this will direct you to our Tiger app. And since we ended on futures with Chiwei earlier, we're going to end right here. But before I go, Chinese New Year is coming up. So we've got the Ang Pao Bonanza. Okay, so collect your Ang Paos. We've given away, I can't count the number of Tiger coins we've given away over this weekend, but we've given away a lot, ladies and gentlemen. But this one here is special. This Ang Pao Bonanza is cold hard cash. Okay, so scan the QR code, find out more. All right, from now to Chinese New Year, and I believe a few weeks after as well. So find the details there, the Ang Paos on your Cash Plus now. All right, so that brings us to the end of WWTD 2022, brought to you by Tiger Brokers, Investing Tomorrow Today. I'm Mark, I'm your host. It's been a pleasure. If you ever need a host or MC for your webinar, feel free to look for me. Cheers, and have a blessed remainder of the weekend.